was in the drawdown and I just I took my top loss early, you know.
Oh, I see. So even though you were on the right side of the trade, you kind of got shaken
Yeah,
out by price action. Interesting.
yeah, yeah.
Interesting. And did you journal those trades? We have our one-on-one this week, so we'll be able to review it. Did you journal each of
Yeah,
those trades you took?
I'm still, I journal it in my own, what do you call, like, I have built an Excel sheet,
Yep.
but I'm still learning this whole Notion thing, you know.
Okay, that's
I'm
fine.
not yet. So maybe in our one-on-one, or maybe today also, if you can show us how to do that,
Yeah.
that will be helpful.
Yeah, perfect. Yeah. So remember, the whole point of us journaling is going to be specifically focusing, right? One second, I'm going to pull it up. We're going to be focusing on our emotions, right? So in this Notion, let me pull it up here. Right? There's a section that's going to be emotions during and emotions after. If you don't fill this in, it becomes a lot more difficult. By the way, to create a copy of this, just go duplicate and create it in your own Notion. It becomes a lot more difficult for me to work with you because I simply don't understand what you're feeling in these trades. So for you, Renaud, it's a really good insight, right? That while you're in these trades, you might be on the right side of the market, but you're getting kind of, shaken out by drawdown or potential short-term drawdown. These are things that you need to be journaling so that as I collect data on you and as you collect data on your own trades, you're able to pinpoint exactly what's causing losses. This is only going to help you improve your model and your edge, and without it, it becomes difficult to assume or to kind of know where these losses are coming from. So please, before our one-on-ones, try and have at least one or two trades with emotions during, emotions after, specifically with respect to the things that are causing you to win or lose, right? Maybe you're winning trades because you're setting and forgetting. Write that down. And maybe you're losing trades because you're looking at it and you're getting shaken out. Write that down as well. These are eventually going to be used to tailor your own risk management models because obviously one size does not fit all for that. There's lots of different things you can do, but you need data first. And without that data, you're just kind of shooting in the dark. So that's what I'll say about journaling. Okay, can you try and do that, Renaud? Just like write those things down.
Sure, yeah.
Okay, perfect. All right, so as you guys can see, the lesson name for today is going to be internal range and external range liquidity. I also, want to do a little bit of top-down practice with you guys, just because that's something that's going to be beneficial for all of us to see. And then the third thing I want to do is go through this week's price action and answer any questions about what kind of we saw on the charts. So I think the best way to do this, because usually what I've found when I'm teaching is that people usually want to clarify kind of price action first, is to start there. So does anyone have any questions about a certain day this week, price action this week, or want to run through kind of what we saw in the week, or were confused as to why certain things happened this week? Shoot away.
I don't know. The only thing I don't really agree with this week was just Friday, like end of day.
The
But I
pump.
think everything else was like pretty clear. No, the pump, I was expecting that, but it was more like the dump.
The dump. Okay.
Like,
So
I know it's reaccumulation for longs.
Mhm.
I mean, at least that's my opinion. But I don't know. It just felt a little too much.
Okay.
I don't know.
So I actually took a trade at Friday at the end of the day on a 5-minute market maker sell model. So let's quickly go through what I saw there. Okay.
Isn't the 5-minute too low though? I think the 15-minute would be like lowest.
It depends on what your time frame continuity is, right? So my intermediate term is going to be the hour, and my lower time frame is going to be 5-minute. Therefore, you can do 15 and 1 with the 4-hour, for example. You just need three. You just need 3 time frames, right?
Yep.
So if my daily bias, so for example, let's look at Friday here. Let's go to the daily. The first thing I'm expecting on Friday is a TGIF retracement if the weekly objective has been met. So how do I know the weekly objective has been met? I look and isolate this week's worth of price action and say, does price have a reason to expand any more past the low essentially put in on Friday? Make sense?
Yep.
So when I look at this specific candle right here on Thursday, what I see is a weekly objective that has been met because we have a daily buy-side inefficiency, sell-side imbalance, right, on Thursday that we trade into the lower quartile of. Now, quartiles, as I told you, are just ways of looking, right, at a gap and determining whether the gap has been balanced or not. In my mind, if we go into the premium or discount of a gap respectively, so in this case it's going to be a discount of the gap, right, that's going to be sufficiently balanced. I don't need to see the gap get fully closed in my mind, just in terms of gap balancing. So then coming into Friday, I have an expectedly bullish, short-term bias. And that short-term bias is going to be to this level. I'm going to take a fib from my weekly candle. I'm going to go from the high of the candle to the low of the candle. And I'm going to look at what that TGIF weekly range is. And the reason why we can do this, guys, right, the TGIF range, is simply because if you look at opening high-low close profiles, what we're essentially saying for this weekly candle, right, is that, let me do this, the week here, let me show you like this, and then go to week. Okay, so the week here, right, has started off opening at a certain price, put in the high of the week, right, as you can see, on Tuesday, classic market maker sell model week, then has expanded lower throughout the week, right, to a point. If we believe that point is the low of the week, which I just told you is, right, this bottom of this gap and this strong rejection back up, on Friday, we have to expect that the candle, the weekly candle, is going to close somewhere. So this idea of opening, right, high, low, close, gives us an idea of why we can expect 20 to 30% retracement. Why? Simply because historically, if you look at data, right, when a weekly objective has been met, this 20 to 30% of the range is a very likely range for the weekly candle to close back within because we need to create the close coming off the low. Let's look at ES for example. Okay? Same exact idea, right? Opening here on Tuesday, right, with the short week, we put in a high, classic sell week, then we put in our low, and what ES does, which gives us more confluence in this, Friday bullish move, like AJ was talking about, is, right, it balances the gap entirely and then rejects Thursday and moves up. So we do the same thing. We take a fib, right, go from your swing high to your swing low. Let's do it on this chart so you can see. Swing high, swing low. And we want to close back within the range. As you can see, we do on ES, right?
That was perfect.
Yeah, it was perfect TGIF on ES, and it was near perfect on NQ, as you guys can see. Look, one second, watch this. It was near perfect until we had a little bit of an end-of-day push right up above, like a couple ticks above or a couple points above that 30% range. But, that was my target, essentially, because I saw ES doing it, and I also had narrative, right? For me, it's like, okay, this is a likely draw. So that's opening high, low, close, right? Every time we have a higher time frame candle, we can expect that. So, for example, if I am on the 5-minute or the 15-minute chart, right? Look at this. Look at this candle. Let's use the hourly candle, for example, right, on the 50-minute chart. You'll see the same thing. So this hour is going to close. And what we expect this hour to do if we're bullish is put in a open here, a low, a high, and then a close. So as you can see, in this 15-minute price action, we're seeing the same thing. We have this 1 hour gap, right? This is going to be the expansion into it. Then, in that 15-minute time frame, right, based on the hourly candle, we're putting in the open, the high up here, and then the low, and then we're closing back right here. So why are we closing back? Because we're coming off of this gap. So you'll see on every time frame, you can use the exact same analysis and look at open, high, low, close, and expect, a certain range On Fridays, we just expect that TGIF range. Anyone have any questions about that concept? It's a little bit confusing, like when I first started like learning about opening, high, low, close, but that's how I think about it now, is that there's always an objective, and if the objective is met, then you can expect a retracement to form these wicks. Any questions about that before we go further?
The delivery of the 20 to 30% of the range, retracement, I guess you could say.
Yep.
That's usually delivered in the PM session, right?
Yes. Well, so yes and no, right? Some days we'll get Friday expansion. So I would say that you are going to get a thank goodness it's Friday range close if the objective has been met at some point in time. Does that make sense? So if you don't meet the objective, say in the AM session, right? And the objective's actually, for example, I'm not looking, this is not true, but say the objective was this high or this high even, right? High of the week. Maybe you're coming off this bullish gap and there's no reason to retrace. Then you wouldn't get that 20 to 30% range close. For example, on a high impact news day, AJ.
Yeah.
But here, is price likely? Remember yesterday, I don't know if you guys read it in Nap's channel, I said, what is more likely to happen on a Friday at the end of the day? Is there more likely to be us closing within the range or putting in a high of the day? Because some people were longing. And the question I asked was, what is more likely? Right? Closing back within a range or putting in a new high of the day to end the day? What's the reason for that? And can you tell me what you think is more likely, AJ?
Like, it's likely to close back into the range, but once it left those double tops, like you said, like, it needs to fulfill its objective before doing that TGIF.
Mm-hmm.
So that's what I was like, that's why I longed, because, like, double top,
Yeah.
daily fair value gap, I was like, all right, the objective has yet to be met, I think is valid.
Okay,
And
so then
I
it just
guess.
turns into we have to understand what the objective is, right?
Yeah.
So on a Friday, we shouldn't expect. Friday is never an expanding day unless. Okay, most important thing is there's never going to be an expanding day narrative unless there's high impact news. If not, we can expect range accumulation, or we can expect moderate expansion. So when we have a double top right on the daily time frame at 2 p.m. on a Friday, there has to be a significant amount of volume, right, for us to break the previous day's high. Does that make sense?
Yeah.
So on a double top, right, or relative equal highs on a Friday, coming off of a PD array, right, closing back within the range, for it to expand all the way to its high, which is going to be up, essentially looking like this, coming down off the PD array, and then going and retesting the high, i.e. the internal range liquidity here. For us to do that, there has to be either a significant driver of that event, or there has to be volume in terms of an ER event, or some sort of folder news, because it's far more likely just to close within the range after establishing the dealing range, right? So the dealing range for Friday, essentially, the reason why we look at premium and discount is because the dealing range for the week looks like this. Here's your dealing range, right? And the dealing range for Friday, we expect this 20 to 30% level to be the expected draw. Does that make sense?
Yeah.
So to get above this, essentially, 20-30% of the dealing range, we need something. And we've seen Friday end of day pumps or sell-offs, right? But usually, what do those precede?
Like news, right?
Or earnings, right? Because usually there's not news on Friday, but there's earnings potentially, right?
Yeah.
That's when we see profit taking and or accumulation or manipulation. But here on Friday, is there any news on Monday next week?
I don't know.
There's not. So let's pull up our Forex Factory. Right? Next week, we have nothing on Monday, nothing on Tuesday, okay?
Oh, nice.
So because of that, we can expect that Monday and Tuesday are going to be low volatility relative to the rest of the week, and also consolidation, right? We're going to put in our dealing range. So Friday has absolutely a reason to leave relative equal highs, right? Why? This is going to be our dealing range now, correct? And then we can expect Monday, Tuesday to do something like this, right? Monday can chop, put in the low of the week, and if we want to expand higher, we'll use order pairing at the low of the dealing range, right? And we'll pair those orders at the high of the dealing range before we expand, right? So that we have to consider volatility and what Friday is intended to do before, you know, a consolidating week or a consolidating Monday. Is that too cherry picked, or does that kind of make sense?
Oh no, it makes sense. Yeah.
Okay, so then let's look at.
Also,
Yeah, go for it.
I was also looking. I don't know if I was right about this, but since we didn't have a Monday trading, not really. Like if you look at like the daily chart and you look at how price action, like the objective was met on a Thursday,
Mm-hmm.
and then it started reversing pretty hard. That's that was called like the midweek reversal, something like that. Because like it's usually on a Wednesday where like a midweek reversal profile happens. But because we didn't have that Monday trading, I guess I considered it.
Yes. And also,
Yeah.
that's a really good point. But also, look at this. So Thursday was our second high impact news driver, okay? So when we have a traditional week, or a traditional buy or sell week, we look to pair the economic calendar with expansion, correct? So when you can see that Thursday puts in the low of the week and starts to reverse, it's because the objective is actually met during this high impact news drop. Look, New York session, right? If we go to our daily and we say, what's the draw? Going into Thursday, AJ, what's our draw, right? We're gonna talk about this right now, about internal range liquidity to external range liquidity. But you see, we're on Wednesday, we've come into this fair value gap, but have we come into a discount of this fair value gap yet? On Wednesday? No. So, once we get confirmation on Thursday, meaning we get structure, look, Wednesday, you could be a bull, right? You could be a bull at the end of the day. We came into our fair value gap, the draw is met, midweek reversal, exactly like you said, right? What is going to give you confirmation that we're going to move higher out of this gap?
Like a change in state delivery.
Yes, or market structure shift, or, right, failure of a PD array, or ability to displace, right? Any of these terms are the same thing, right? So here, we have no change in state of delivery, we have no market structure shift, right, above. I guess here you can see there's no market structure shift put in this price action right here. We have respect of this PD array right here, this fair value gap, and we have a failure to displace any higher, correct? So going into Thursday, are you now bullish or bearish?
Bearish, like
Cool.
going into Thursday.
Yep. So now we say we're not going to get a midweek reversal on Wednesday. Let's see what Thursday gives us. Okay, Thursday we dig in to a discount of this array, okay? This is our discount, right, of the daily fair value gap. Then we have a dealing range put in, high, low, right? This high right here liquidates buy side. This low liquidates sell side. This is our dealing range right here. And, right, at the end of Thursday, you can see we get a change in state of delivery when we close above this candle, right? You can use any of these candles, but we also have a market structure shift right here. Do you see this market structure shift?
Yep.
And with the market structure shift, right, we get an immediate rebalance. So these are bullish signatures because not only do we have a change in state of delivery, right? So this is now going to be our breaker block right there, right? This is going to be our market structure shift right here. We also have this immediate rebalance. So we would have a fair value gap here, right? That's what it looks like. But we come back down. So there's efficient offering on both sides. This right here you can look at is a very, very small balanced price range right in here. Buy side delivery, sell side delivery, buy side delivery, right? Comes back down. Doesn't even come into it. And we move higher. Then, going into Friday, we're decidedly going to be bullish, like you said, right? So what do we look for on Friday to confirm that? A continuation purge, which we get in London, right? Do you see that? This purge right here? Okay, now we wait for New York. New York has no high impact news drivers, right? On Friday?
No, I don't think so.
Yeah. So what we can expect is continuation, right? Because we've already confirmed bullish order flow. We're coming off of this fair value gap, right? So 1 hour POI. What's our 3 time frames? Daily POI for a reversal, right? A 1 hour structure confirmation, and then a 5-minute entry. So on Friday, let's just rerun. Let's run the whole day now. So we've done top down. So moving into Friday, we're looking at our daily point of interest. Then we're going to move into our hourly, and we're going to look for hourly structure. We get our market structure shift when we close above this high, so we'll mark it out. Okay, that's our 1 hour market structure shift right in here. Then what we look for is
One question I have here.
Yep.
When we look at market structure shift, like you said, on the 1 hour, this up close candle that you're taking, that swing point there, do we always take the, when we are looking for a bullish structure, market structure shift, it has to be the up close swing high, and for the bearish, it has to be the down close swing low?
Yeah.
Is that how we determine?
Yeah, here's a really...
On the hourly, and it has to be the body close above, or... I mean, we need to stick to some rules, because somewhere I read, it has to be body close. Sometimes they know.
Sure. Let me tell you guys exactly how I do it. So the most important thing about market structure shifts, right? The most important thing that we have to recognize is what level we're using. So as you said, I'm going to use this high right here because I'm going to watch order flow on a candle by candle basis. So say I had a paintbrush, right, and I was painting orders. Here's a low, right, or here's a high. Oops, sorry. Here's a low, then a high, then a low, then a high, then a low, then a high. Sorry, it looks really bad because I did it in a highlighter. But when I do it like this, right, can you see that when we break this point right here, we're closing above a significant high on the 1 hour?
Mm-hmm.
So this, if we break structure with a body here, that means we've shifted state of delivery, right, with context as well, right? We have our POI here on the daily that we're looking for. That's been hit, right? The premium or discount of a fair value gap. So I use quartiles, which I told you guys last week. We come in to severe or heavy discount of this range, right? This imbalance. And we put in our PDRA matrix from the bottom, starting with a rejection block, right? Do you see these wicks? Okay, that's strong signal. Then we put in a dealing range, a low, right, and a high. And we close above the dealing range. Once we close above this high right here, right, this market structure shift, we can look left and see, okay, where is our change in state of delivery, right? On a lower time frame, it's going to be this candle right here that we're closing above. And then all we have to do is watch order flow. Do you see us continuing to be bullish here? We don't close back below this. You see what I mean? We're just accumulating until London session. Do you see that?
Mm-hmm.
So this is bullish because we're not rejecting this high. We're not displacing lower. What we're doing is we're respecting this inverse PD array, right? Like this. Do you notice the halfway point is being held?
Yeah.
Okay, so we're bullish. Now what we do, right, we're going into this session, if we want to know what Friday's trade is going to be, here's something I wrote up for you guys last night to make it make a lot of sense. So, are we going to continue or reverse? And these terms will make more sense when we finish a lesson about ERL and IRL. But we're continuing if the daily internal range liquidity in this case has been met and external range has not been met yet. And we're going to ask ourselves 3 questions, right? This is London continuation rather. Is there news on Friday? No. So we're less likely. AJ, right? Remember your question about of breaking previous day's high on Friday or putting in a new high of the day?
Yep.
Are we likely to expand? No. There's no news on Friday. Did London accumulate above or below the true day open or the midnight opening price, right? So here you can see the midnight opening price. Tell me, if I look at this session right here, let me show it for you. Why is my London not showing? Okay. Is this London session above or below the midnight opening price, guys?
I know candles below, but yeah, it's been above most.
Oh, is
Been
it
mostly above.
mostly above? Well, look. 2, 3, right? 4 drops below. And then 5's the end of the session. So we're accumulating mostly above, right? In this session, go down to a lower time frame like the 15. Do you see how we're mostly above the New York Open here? Okay.
Yeah, that's not good.
Yeah, well, it still tells us something. If we are above, right, the true day open or the midnight opening price, this is going to be our lecture later I'll do on Power of 3. But if we're, and let's not try and teach everything at once, but if we're above this midnight opening price and we are bullish, we can expect a reversal. If we are below this midnight opening price and we're bullish, we can expect a continuation. And when I say reversal continuation, I'm talking about from London to New York. Can anyone try and explain to me, right, why they think that's the case?
Above is premium and below is discount. The true day open.
Yep. So why would...
Does it have to do with the open high low close or open low high close?
Both. Yeah, exactly. Who said that? Yeah, Duncan? So Duncan and AJ, you're both right. So there's 2 concepts here. This is going to be power of 3, right? Opening high, low, close, and accumulation, manipulation, distribution. Okay? So what AJ is talking about is when we are above, right, the true day open, what we're doing is we are accumulating, right, in net premium, right, of the dealing range. That means when we get this Judas swing in the morning, what we're doing is we're order pairing, right, distributing, and then buying longs into New York. So this is going to be opening of the day, right, accumulation near the open or above the open, distribution lower, low of the day in London, right, high, close, right, opening, low, high, close. And we know London's going to put in the low of the day, or this is called late London here, guys, from 5 till 7, because we've accumulated above, right? So this is opening right here. Think of this as opening, this candle part right here, this part of the wick right here. Now, we need to put in the low eventually. Opening high, low, close will happen, right? This is also called accumulation, manipulation, distribution, whatever you want to call it. So we're accumulating here. We will manipulate to put in this lower wick. And then we must put in the high of the candle. Remember, this is just the open. So unless we think that this is going to be the high of the day, which we shouldn't expect that because we're coming out of our, right, internal range liquidity. We're hoping to see external range liquidity. We need to put in the wick high, which will happen in New York, and then close back within the range. So when we are above the true day open in London, accumulating, we expect reversal or continuation. What's the answer, guys?
Reversal?
Yep, exactly. And do you see how that happens right here? See how New York is reversing London right here? Does that make sense to everyone, or do we need to spend more time on that? Because it's a little bit complicated.
Yeah, I mean, it aligns to the whole AMD concept, right? The
Yep.
accumulation is happening during the London. Late London is manipulation, where it brings it down and then pumps from there. So that's your distribution.
Yep. So you can also draw the boxes here if you guys want to make it make more sense, right? This is accumulation. This is manipulation below into discount, and then this is distribution, right?
Mm-hmm.
So AMD, and the reason why this works is because opening, true day open, low, high, close. Right? That's the daily profile. Let's compare that, right?
Hey, real quick,
Yeah.
on the AMD, I don't know if you've seen recently the AMD X.
X is either continuation or reversal.
I know. Do you subscribe to that?
Yeah.
And then
There's
you-
also
okay.
I'll do a lesson eventually with you guys. There's lots I want to teach you guys, but I know it has to come in steps. So there's something called Day's Quarterly Theory, which I'll teach you guys as well, which is going to be 90-minute cycles within sessions that you can look for AMDX.
I saw those boxes.
Yep, yeah, that's why I took it off, because there's no reason to overcomplicate lectures and go through too many things. We want to obviously touch on what happened, because it's cool to see this stuff, but yeah, we'll definitely get to AMDX, which is cool that you know what it is. X just means reversal or continuation. And you'll notice that there's very specific times for X to happen. 10:30 is one of them, 2:30 is another one of them. Look at this, you can already see it, right? 10:30, 2:30, right? On this day, 10:30, 2:30. Yeah, you're right. There is something to be said there about time and cycles. All right, what about this day? Let's do one more before we go into Friday. Are we on Thursday? I'm going to draw out the opening price for you guys. The true day open is going to be right here. On Thursday, are we expecting New York continuation or New York reversal? Based on this opening price idea. So is London accumulating above or below the midnight opening price here, guys, on Thursday?
Below the
Okay.
opening price, so
Okay.
continuation.
Continuation in New York or reversal?
I guess I'm not seeing the reversal. If that's what if that's
Well, okay, so
You know,
if London accumulates below the midnight opening price, right? And
Yeah,
are
which
we
you
bullish?
expect.
Are we bullish or bearish on the day, moving into our daily level?
oh, I see.
Well, what are we? Bullish or bearish on the day?
I honestly, it could have gone either way. That could have been a liquidity sweep with the London special.
Okay, but just look at the higher time frame. Let's not lose hindsight. If we're just moving into the day, right? We have to have a bias. Are we expecting, right, in this Thursday, for this gap to be a bullish move out of it or to continue moving lower? Just based on a fair value gap on a higher
Thursday,
time frame.
like moving lower to fill whatever that discount area of the daily FEG.
Sure. Okay. So right now we are below the midnight opening price, right? So this is going to be our opening. We're putting in the low, right? Continuation, right? Because London is, so we're bullish, right? And we're accumulating below the midnight opening price, right? Or if you're bearish, right, on this day, you can eventually be bearish up until a point and then look to reverse, right? Both ways, what I'm trying to say is we're expecting some sort of reversal inside Thursday, correct? After filling this gap.
Gotcha.
So it's the same idea I just talked about, right? Opening is the midnight opening price. Here we're putting in the low, right? So this is this part right here, opening. Putting in the low. Then we're going to put in the high, and then we're going to close. So if I rewind it to this day, do you see how we have this strong, like, fishtail right here? We have this strong wick. We can expect that just based on how we see London accumulating, right? You see what I mean? We're expecting then New York to put in the low of the day. Because London here, right, has accumulated below, distributed, New York put in that low, and then eventually moved off it. Yeah, makes sense?
Yeah. Is this kind of something you expect to see inside of like a daily fair value gap like this? Kind of the plunge and then bird.
Yep. I mean, this is exactly what we expect to see in a daily fair value gap. We expect to see these mohawks, right? These long tails.
Right, yeah.
These long tails should be at points of internal range liquidity, which this is by the way, it's not the lesson yet. I know it's taking a while. I just want to review market review with you. Do you see how this fair value gap here has a very similar set of mohawks? These long wicks. Because what the day is doing, right, is we're opening high, manipulation into the gap, then we're moving away from it, right? And we're distributing prices into an lower. Make sense? Here,
Yeah.
we're opening,
Yeah.
we're manipulating into the gap, and then we're distributing prices higher. Notice how this tail is not the majority of volume is shown in this body, right? Do you see that right here? And this is just a long tail. This is your manipulation right in here, and then distribution higher. This is your manipulation in here and your distribution lower. Okay. Let's do one more example of this concept. So right here.
So if that was the case, like, could you walk us through why during that 3 a.m. London session you were looking for that, like our MMXM model and a short on Friday morning, like early morning London session?
Like right here?
Yeah, I mean, you did a short there, right, on the M5.
I did, yes. So for me...
So what was the thesis for that?
Yeah, it makes sense. So for me, right, price is fractal. So I'm expecting an opening, low, high, close, right? AMD on the day. So what I'm seeing here is price is above the true day open on a bullish day. Okay? If we are above the true day open on a bullish day, that means that London is accumulating a net short position to distribute to make the low of the day. Does that make sense? As opposed to London distributing below the true day open, right, to accumulate to make the high of the day. So if I, for example, I'm going to make this really clear. If I saw London trading below the true day open, right, I would just simply expect New York to continue and put in the high of the day. Why? Because we're order pairing at the low for the high. Or no, I haven't touched order pairing yet. What we're doing is we're accumulating at the low, right, and we're distributing to the high. That would make sense, correct? If we were below the entire time.
Yeah.
I'm bullish on Friday, right? We both said I'm bullish on Friday. The reason why I played a short is because I saw London accumulating above the true day open, meaning at some point in time, Renault's, doesn't the candle, it must put in a low of the day?
Mm-hmm.
Okay, if I'm bullish, should London put in the low of the day above or below the true day opener, the midnight opening price, if I'm bullish? Should the low of the day be below or above the midnight opening price, guys?
Below.
Of course, right?
Below the midnight open.
It would make no sense for the low of the day, right? Unless there's external news drivers that just cause the market to pump at 3 a.m., which it can. On no news days, it's unlikely for the low of the day to be above the midnight opening price. Why? Because this is discount. I mean, this is premium, right? So the low of the day is going to want to be distributed and accumulated down here before eventually putting in the high of the day in some sort of premium. So the reason why I took a short Renault is just because of that thesis. I see London trading higher on a bullish day, meaning that is a reversal profile for late London or London and then New York. So this here is going to be our, it looks like this. Opening, right? High, or this is going to be the, no, our high is going to be put in the range. Low, reversal, close. Have you guys ever seen like Twitter gurus like post stuff like this? Like T-Trades loves to do this thing. You guys ever seen him post a chart that looks like this next to one of his like graphs or next to one of his charts?
Yeah.
This is because that's exactly what he's seeing too. So he is seeing that this is our midnight opening right here. And this is weekly profiles, and I will have a lesson on this. Don't worry, guys. Again, there's just so much to teach all at once, right? So it's hard to know this and cherry pick it in hindsight, it seems like. But I promise you'll understand why this looks like this. So this is our opening. We are bullish on the day, meaning the low has to be put in at some point in time, and we expect New York to be the reversal of London if we're chopping above that opening price. So this is this. Open, right? Manipulation above, distribution below, put in the low of the day, then reversal in New York, put in the high of the day, and then close within the range. Okay? Does that answer your question kind of, Renault's? I know it's a bit cherry-picked, but that kind of makes sense?
Yeah.
So
now it does.
Okay, so in short, I'm bullish on Friday, and I'm seeing London accumulate above. Meaning I expect London, before New York session to start, to come back down, right? remake or reprice discount, make the low of the day, make that wick, and then I expect New York to never come near this wick again. I would not be targeting low of the day in New York at all because London has now put in low of the day. Accumulation here, manipulation, distribution, thank God it's Friday. Literally, you can think about that. Accumulation, manipulation, distribution, TGIF. Here's the range, right? Boom, 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 boom. As opposed to this here, right, where we're, again, quickly, midnight. Right? On this day, I am bearish. I'm seeing London accumulate below this midnight opening price, meaning London is unlikely to put in the low of the day. Does that make sense to you guys? Like, do you see why New York is a continuation of this bearishness in the morning as opposed to a sharp reversal? Do you see why? Is it likely that London will put in the low of the day here if we're accumulating below the midnight opening price? No, right? Because we're bearish. So what we're doing, like I said here, like let's pull up this text again. This is actually a really good, this wasn't planned, but this is a good like piece of learning. So
when we are looking for like the high time frame PD arrays, like even like FEGs or order blocks, these, they, in order for the weekly objective to be met, like you explained here, doing it in quartiles, is that like we always have to like look at from that point, from that angle, how, like the day is shaping up, basically,
yeah, I mean,
for
you
a
can,
reversal or something?
You can also just look at market structure, right? So again, the way I've taught you is really mechanical with our system. Higher time frame is the daily POI. So what we're going to do is we're going to look at the daily POI. The first day we trade into it, on our intermediate time, remember, we go from daily to hourly. On the hourly, I'm telling you to look for structure. So on Wednesday, we trade into it, and you could be thinking, are we going to reverse here? Do we ever get bullish structure out of this on Wednesday? No. Right, Renault? Is this bullish structure in here once we trade into it? On the hourly. Is it bullish or bearish structure, this price leg in here?
It's still bearish.
Okay. So, next day, are we expecting higher or lower prices?
Lower, yeah.
Okay, there you go. There's your buy for the next day, okay? So now we expect to retrace further. This is your draw on liquidity, right? You can see London, right, moves lower, expands lower, expands lower, expands lower, expands lower, expands lower into New York, right? Late London, early New York. Then we put in these strong wicks like we had here, and we wait. We wait, right? Is there a bullish confirmation in this area before we close above here? No. Once we close above here, yes. That's why on this day, is there really a trade you can take on Thursday? Using our system.
No.
No.
If you go to the shorter time frame system, then yeah. But
Yeah.
This time frame, no.
No. Because remember, we want time frame alignment, guys. So I want the daily being in line with the hourly being in line with the 5. So let's go back to the first question we had before we got all sidebarred, which is, why did I short on Friday, right? So my daily bias on Friday here was long biased, right? And I'm seeing a clear manipulation above true day open. So therefore I have confluence in the shorts because I want to distribute lower. So that means my daily is in alignment, and my hourly, although I'm taking a short, I'm shorting to a discount. That's in alignment. Then on the 5 minute, right, when I eventually take the play, I'm also in alignment. So what do? I wait for a market structure shift right here. Here's Renault's. Here's the play I took last night. You probably saw. I called it out. Then I wait for a return to discount, a PD array I'm interested in, which can be this balanced price range. Right. So now I have my market structure shift on the 5 minute. I
knew there was a BPR in there.
Yeah. I have hourly.
I couldn't find it.
Yeah, that one was a tough one to see. So I have a daily confluence to move lower, right? To put in the low of the day. I have an hourly confluence to move lower because I've swept out this hourly high right here. And I have a 5-minute bearish market structure shift. 3 time frames are in alignment to go lower. There we go, sell off. Then, in New York, there's all 3 confluences to go longer. Remember, daily, traded into our POI. Hourly, wait for market structure shift to be bullish, right? Here is our market structure shift right here that we got on Thursday, confirming bullish prices, right? Look at our dealing range, or look at your OTE if you want. Notice this is not a coincidence, guys. Look at the bodies. You see that? Where's it lining up with? In late New York, right? Here's our bullish hourly PD array, order block. Now I want to go long. I have all the reasons to go long. So daily is supporting a buy. Hourly structure is bullish. Drop down to the 5-minute, right? Again, on the hourly, you guys can see what I saw there, right, with the continuation purge. I taught you guys this in the very first free lesson. This is our purge. And then on the 5-minute, we push up. We break structure right here. Okay, everyone knows. Are all 3 time frames in agreement of long now?
Yeah.
Okay, so are longs high probable now?
Longs are high probable. The only thing which kind of, I didn't take this long is, when it did like that market structure shift on the M5, I was waiting for a pullback to an OTE, like at least 50 to 61.8% to get long. But
that's why I tell you to stay on the hourly to get your context. Do you see how we do get the OTE? So look, you see how London is accumulating above the true day open, right, on a bullish day? That means we expect New York reversal. Essentially, if London is manipulating above the true day open on a bullish day, we expect New York reversal. If London is manipulating below the true day, we expect a continuation. Okay? Make sense? So, draw your fibs out. Do you see your OTE entry? Remember, we're not using 5-minute for structure. I've never told you to use 5-minute for structure, have I? I said use the hour for structure and the 5-minute for your entry. So right now, right, going into New York, you're looking for the 2 things I told you, which are going to be a continuation purge, right? And a return to a PD array in discount, correct? You get both those things. This order block is at 61.8% of the move, okay? Between this dealing range high, this dealing range low. What's a dealing range? This liquidates sell side, this liquidates buy side, this is your dealing range. Make sense? This is your internal range in here. So is this OTE? Yes. Is there an order block there? Yes. Do we have a liquidity purge? Yes. Use the hourly Renaults for structure. Look for your OTE, look for your PD arrays on the hourly. Then come into your 5-minute once those have been hit and look for your market structure shift. After this happens, this in here, right, that you're looking for OTE, this is simply a small leg of the hourly retracement. Do you see that? That's just this tiny wick in here. That's this. Really, you played the OTE of the structure which you're trading, which is the hourly.
Got it.
Your entry can be the first fair value gap after market structure shift. What is that called? Low risk entry, right? Right here. There's news dropping, right? Or no, there's not news dropping on this day. There's 9:30 a.m. Like volatility injection. Look at the bodies here. You have a chance to get in here and get in here and get in here. Do you see this accumulation?
I didn't know it was after the market structure shift. That's good to know.
Yeah, because remember, what are we using structure on? What time frame?
1 hour. So
1 hour.
That makes sense.
5 minutes just entries, right? 5 minute we want to see, right? These market structure shifts. Again, there's another market structure shift right here. This is a short-term market structure shift in the 5 minute. This is a longer term, right? After we shift market structure, do you notice even here, every down close candle supports price? So look, we close above this. This becomes an order block, right? Look at this next candle. Immediately rebalances this order block. Push up. Violates this fair value gap. Immediately uses this fair value gap once it violates it, right? As support. Then push up. Now we have a breaker block. Do you see this breaker block in here? Look at how each candle on the 5 minute is showing you bullish market structure, right? After these two.
Like, so if it breaks the 1 hour swing high, then that's the market structure shift we were looking for, not that market structure shift on the 5 minute below.
And they both are. They're both valid. As you can see, which one aligns with our kill zone? This one right here, right?
Right?
This one,
Oh,
this
yeah.
lower one. So this is called your minor market structure shift, and this is called your intermediate market structure shift. This would be your major market structure shift. Okay, they're all valid. This one, and this one. Okay,
Yeah.
they go in descending orders of confluence, right? So this is gonna be your highest confluence market structure shift right here. Okay, because it's your highest time frame market structure shift, right? Then this is your intermediate time frame, and this is your lowest time frame on the 5 minute. Make sense?
Yep.
What do I teach you? Just look at the hourly first. I don't care about the 5 minute yet. Once I'm on the hourly, guys, until I see something I like. Because the minute I go down to the 5, that's when you can start to confuse yourself. I'm here. I see OTE retracement. I see accumulation above, so I'm expecting New York reversal. I'm not expecting continuation. If I was expecting continuation, I would have seen London do this and then New York push up. But I didn't see that. So, bullish day, retrace to OTE. Here's my order block. Here's my hourly purge. Both conditions met. Down to the 5 minute. Here's my market structure shift. Where's my first fair value gap entry? The low risk entry, guys, is right here. This is your low risk entry, this order block in here. So this is where smart money is accumulating their first position. Okay? Then we have another market structure shift and a fair value gap. This is your low risk fair value gap entry. Where's your silver bullet? Right here. Notice the time, 10 a.m., right? What ICT teaches. What do we know about silver bullet? It's just the second phase distribution, right? And you could take a trade like that if you want as well from here.
The only reason I hesitated and then I had like huge FOMO is that silver bullet entry, the stop loss was too wide, you know.
Yeah, it's on the other side of the planet.
I mean, yes and no. You have to use context as well here because look at the other side of the curve, right? So here on the 5 minute, we're going to use our market maker model now, right? Because I tell you, daily POI, hourly structure, 5 minute market maker, right? This is where you find your entries and you find your original consolidation. So your original consolidation is here, correct? In your 5 minute market maker model? Anyone see anything different? There's this high up here, but that's too far left. I'm looking immediately to the left for my original consolidation. I like that. So that means my draw on liquidity is this high. So once this has been met, you're right. You could say, I don't like the fact that we've gone to my draw on liquidity and now we have a huge stop loss. So what we have to do is we have to zoom out more here. At this point in time, you can see we have swing highs up here, relative equal highs. And this can become a draw on liquidity. And we want to monitor, right? We want to monitor how we react in this area here. And how are we going to do that? We're going to do that by simply using south side of the curve. Like I've told you guys, right? Mitigation blocks on the other side. So do you see these up close candles right here? Everyone see this?
Yeah.
This here is an order block, correct? On this side of the curve. This is a bearish order block here, right? Once we trade through it, what does it become?
Breaker.
Do you see a fresh PD array painting within the breaker block? Your silver bullets?
That's your unicorn.
That's your unicorn setup. So where is your stop loss now? Your stop loss can be all the way, instead of this low, your stop loss can now immediately move to below this breaker. you've already cut your stop loss now from, say you enter at the top of it, right? You've already cut your stop loss from the top of this gap to 40 points as opposed to 80 points, right? Usually, you're not going to want to enter at the top of the gap. You're going to want to see some sort of confirmation. So I would enter somewhere, you know, when I saw this wick forming. So really, your stop loss, guys, for this, if you use context, is 28 points. Not bad, right? Considering the upside of a potential drawn liquidity of 70 almost, right? That's how you can use breaker blocks and context, right? So look, use this side of the curve. You also have another, you want to be more specific. You have this. Right, there you go. You want to make your stop loss even more? Put it at a body close below this order. You want to make your R better? Put it at a body close below this breaker block, or this mitigation block right here. Do you see how we wick into it and we don't close below it? There you go. Now you've reduced your stop loss from the top of the gap to a close below to about 20 points, right? There's ways in which you can reduce your stop loss, what I'm saying, Renaults. You don't have to put it all the way down here. I wouldn't put it all the way down here, right?
Yeah, that's too much risk.
Way too much risk. But look to the left. If we're on the sell side of the curve, we can use levels on this sell side of the curve on the buy side of the curve. Look, watch this. You know this low time for like this low risk entry, right? What do you see here?
Breaker block.
This right is narrative. This is context. We know this is going to hold. We know this is our low risk entry now because this is the sell side of the curve. And once we break market structure right here, right in here, we have buy program activation. Okay? Right in here is buy program activation. Now, every single down close candle will support price. So every single up close candle, right, will support price on the sell side of the curve. If every down close candle on the buy side of the curve is going to support price, every up close candle on the sell side of the curve is going to support price. Think about this, guys. Just use this idea in your head. Old selling is equal to new buying after smart money reversal. Old selling, right? Where do you guys see it? Right in this area here, right? Do you see how we sold off here? That's going to be new buying, okay? Old selling, do you see how we sold off here?
Yep.
That's going to be new buying. Keep going. Extend that to your drawn liquidity, right? So I guess there's two, right? You have your original consolidation, accumulation, here, accumulation, 2, distribution. Smart money reversal, buy program activation, accumulation, accumulation, right? Distribution. A very, very clean market maker model right here. So every time you see old selling, think of it as new buying. Old selling, new buying. Old selling, new buying. How do you confirm it? Use a breaker block. Up close candles on the sell side of the curve are new buying opportunities on the buy side of the curve, okay? Down close candles on the sell side of the curve are old selling. You should be buying into these down close candles, okay? When you see these down close candles here on the sell side of the curve, this here is being paired. This is order pairing. Smart money is buying at this low, right here at this wick. That is where they're pairing their orders. They want to distribute and sell here. They want to sell here, and they want to sell here. These orders are locked in. I'm going to teach you guys eventually of order pairing. These orders here have fixed profits for them. So they're going to buy here, sell here. Buy here, sell here. Buy here, sell here. And you know that's going to happen because these breaker blocks, right, of old selling are going to be where they mitigate or where they distribute and unload. Make sense?
Yeah.
Pairing the low with these areas.
One question while we discuss this is, why is it not a good idea to enter between 6 a.m. and 7:30 because I tried along there. Thankfully, not in my PA account,
Yeah.
but I lost in my eval. I tried the long in that 5 minute,
So
time.
I'll
there.
teach you. I'll teach you about this eventually, Renaud, as well. Let's not do too much today, but this is because you have manipulation that happens in this area right here. Okay. This is a manipulated time of price using quarterly theory or days, 90-minute cycles.
So we only have to get in from 8 a.m.
Only
during kill
ever
zone.
enter in the kill zone. Never outside the kill zone. Ever. Ever. Because what do I tell you to look for? Right? I tell you to anticipate a stop hunt, right? Before we push up. So why would you trade long when you're anticipating a stop hunt? Well, you said you got in at like 6:37, right?
Mm-hmm.
Had you had a stop hunt yet?
No,
No. So what do
not
you...
on the hourly.
Okay, well, what are you going to use a different time frame or only the hourly for your stop hunts?
Hourly should be the stop hunt. Yeah.
Yeah. Daily POI, hourly structure, M5 entry and market maker model, okay? Say it with me. Daily POI, hourly structure, market maker model on the 5. So when you're looking at hourly structure, you're expecting and anticipating a liquidity purge before you go into a 5-minute market maker. Why? That's your smart money reversal. Remember I just said your buy program activation? There has to be a raid of liquidity first. So why would you enter before you see that raid?
Got it. Yeah.
Right? The kill zone is your long here, right? Is exactly what market makers want. Do you see this inducement here?
Mm-hmm.
They're inducing you to go long. This is manipulation, right? Accumulation. I mean, you want me to draw boxes because then maybe it's easier to see. Accumulation, manipulation, right here, right? Distribution. Do you see that?
Uh-huh.
You are getting chopped up in this because the higher time frame is waiting for the kill zone, the highest probability bread and butter model to get us liquidity purge. You are the liquidity right here. Then they push up, right? So we don't want to do that. We're going to wait to see this liquidity purge. You guys have watched Casper SMC, right? He says no raid, no trade.
Right.
Okay,
Right.
so no raid, or I'm going to preface this, or no return to a discount PD array, no trade. So if this didn't come into the hourly order block, if it didn't purge liquidity, I'm not longing here for no reason. There has to be a smart money reversal and a buy program activation. I have to see something like this. If I don't see this, I'm not trading. And remember in London, dude, look at this. What does this wick look like to you?
That's the
Sell
purge,
program activation.
The liquidation.
Yeah,
No.
you're right, liquidation. This is, right, look at the hourly. This is smart money reversal right here. We're liquidating these highs, okay? Now we have SMR, sell program activation, right? Now I go down to the, like I said, let's do it again, show you the exact same thing, why we only enter in kill zones. Even though I'm long biased today in my bread and butter setup, doesn't mean I can't be short biased to it. This is me playing the chart. This is me really understanding narrative, like I've told you guys is so important. I know that London, right, doesn't want to push up from this premium. It doesn't make any sense for us to go, woo, all the way from this market structure shift to this buy side. There's no liquidity generation going from here to here. Markets don't do that. Markets won't just go like this unless there's high impact news. I don't believe it, I don't buy it, and I won't trade it. What I will trade, right, is a return to my New York opening where I want to buy, right, in discount. So here's my smart money reversal, here's my sell program activation, here's my target, this hourly order block. Okay, here, I'll keep this here for you guys so you can, so this is exactly why I took the trade, Renaud. This is the thesis behind the trade. Smart money reversal on the 5-minute after 1 hour liquidity sweep. So here's my 1 hour liquidation right here. Okay, continuation purge, smart money reversal. Every single up close candle, right, will support price lower now. So this is my sell program activation. Every single candle will support price lower. So I wait for my market structure shift right here. Market structure shift in the 5-minute. Return back to, as Duncan said, this BPR, sell side, buy side, sell side. This is your low risk entry. You don't have to take it here. If you can't recognize this BPR, don't worry. Someone point out the original consolidation for me right here. Someone point it out. Tell me when to stop.
From like 215. Oh, the original consolidation?
Yep, on this sell program, on the 5 minute. We're looking at this sell program. Where are my low hanging fruit targets?
2040. I don't. How do you? Why is mine in military time? 2040.
That yeah, 115, 120. That yes, that
Here,
area.
yeah.
That's your
Low hanging fruit.
First TP1.
Yes. Then I can use hourly structure, right, to get my second take profit. Here's my original consolidation. Here, guys, here is a full day's worth of trading in one session. You can just trade this and be done for the day. Okay, you're done. If you take profits on your PA, you're done. I didn't trade my PA. Remember I said I'm going to sit out New York AM session. I told you because I already got my trade here. This is my sell program. This is my 5 minute market maker model. It's so clear, right? Original consolidation is actually here. Accumulation 1, right? Accumulation 2, accumulation 1, accumulation 2, distribution.
So what's that? 840.
Yeah. Yep. 840, 8 to 10 essentially. Original consolidation, accumulation, accumulation, distribution. Very quick, rapid distribution. Then sell program activation, right? Accumulation 1, accumulation 2, terminus. Where is my target for my runners? Right? Go on the hourly. Like I said, use your hourly structure, 5 minute market maker model. Oh, this hourly order block looks like a really good order block. Why? It's the last down close candle before we broke market structure. This is a A+ order block, right? Okay. There's also OTE lining up, 61.8. All the confluences. Here we go. Right? Here's your market structure shift, low risk entry. Once we break down here, notice how we refer back to this candle, right? This is your next entry right here. Order block, right? Up close candle, move down, high probability, very high probability order block right here. Take your order block entry, okay? Break down, come back up, take your fair value gap entry if you want. Break down, come back up, take your order block entry. Too bad we're not in a kill zone. Notice, Renault, how as soon as we leave the kill zone, right? None of this becomes as high probable. Look at this. Look at the choppiness here. Do you see how rapid this distribution is? And then look at this last distribution. Look how long this takes. From 5 a.m. till 8 a.m. as opposed to from 4 till 4:30. See? Quick. Shitty. You don't want to trade any of this. Right? Quick. Shitty. Like, look at this garbage. Look how shit this is. Imagine trying to trade this, guys. How on earth is it possible to trade this? Like, what the hell is this? Like, I wouldn't even look at this, right? Like, in the afternoon at 2 p.m., look how quick it is. Right? When we come into our PM session. That's why we align time with price always. Because if we don't get time and price, we're going to get trading this. We're going to get trading this. We're going to get trading this. Like, no, you don't want to do any of that. So there was your market maker model on Friday. Okay, that was a lot of review of Friday. Any questions about any of that? Did we all see kind of how that worked out?
Yes, this is very clear. Thanks for sharing it.
Yeah, of course. Guys, the lessons are great. This is greater. I'm telling you, backtesting is the single best way to convince yourself of the TA, and it's the single best way to cheerlead yourself into being able to take these plays yourself. So I have no problem spending hours doing this because, guys, I do this every day. Like, I'm no different than you guys. I spend hours in the chart every day doing the same thing because this is how we actually get it. Okay, do you want to get into the lesson now? Any questions about this, by the way? I didn't even read this.
Not a question, but like I saw something on your chart, which on the micro charts it doesn't show. And bro, that shit really fucking pissed me off because like now I understand like besides the TGIF and whatnot, like why we retraced. Because there was an hourly fair value gap, which would be our silver bullet.
Yes.
Which was lower, and on the go left, right, your silver bullet.
Right here. Yeah.
No, to this one. Yeah.
Yeah, right in here.
That's your
This silver bullet.
No, there's actually one lower than that.
Here?
Yeah, like those candles. It almost looks like a breakaway, but that's actually a fair value gap. It's like a tick.
Oh, I see.
And now I understand why we retrace into that.
I mean, here's what I'm gonna say. A controversial opinion. On the higher time frames, like the hourly, order blocks over fair value gaps, guys. Look at this order block. Come on.
Oh yeah.
I mean, come on. Like, literally, I think order blocks on the higher time frames are so free. You guys have heard me saying that the past couple of weeks, right? I love order blocks in the higher time frames. Look at that. Look at that reaction, right? Better yet, look at this reaction, which is where we took our trade. I mean, come on. Don't overcomplicate it. Look at that, right? Look at the bodies. Do you see that? I love order blocks for this reason, guys.
Look how it holds those ticks on that fair value gap. Like it just holds those wicks. It's crazy.
On this order block, you mean, right here?
Yeah, on that order block.
Yeah.
Also on that little fair value gap, it's literally just a tick. It held all of the price up.
Yep.
That's crazy.
And the thing is, so for the last thing I'll say is for this PM sell-off that I traded yesterday, right? The reason why was because first of all, I'm anticipating TGIF, which is going to be in this range here. But second of all, right, what we've done here is we've liquidated this high, right, on ES and had an SMT with NQ right here. So for me, the likelihood of this high being ran on a Friday is so low now, right? We have now had our accumulation. Like, just guys, I know I'm repeating myself, but look at this, right? Open, right? Accumulation, manipulation, distribution, close. Like, this is what price does. There is no chance that price is going to come back up after liquidating this high and forming an SMT with ES and just randomly go higher. Why? Like, why would it look like this? What's the reason? There's nothing to support this thesis. Nothing. It's so much more likely that price closes back within the range. So this for me is a free PM setup short against my, like, hourly structure. Remember, what did I say your highest probable trade is? New York bread and butter. Do we get the New York bread and butter? Yes. Are all of our time frames aligned? Yes. Hourly structure right here, right? Hourly structure, bullish. Daily structure, bullish. 5-minute structure in New York, bullish. That doesn't mean there's not money to be made elsewhere, right? But when you're starting off and you're not profitable, don't trade the London session. Don't trade the PM session. Stick to the system. Stick to your bread and butter setup. But for me, the reason why I was so confident in that short at the end of the day is because the market profile doesn't support any move higher. So me, I see this high come in. Now I'm down to my 5-minute, right? I see a shift in market structure right here after we liquidate those highs, right? I see low risk entry right here. You guys see that? Within this BPR, sell side, buy side, sell side. Here's your low risk entry. Break down further. Now we have, look at this. Down close candles before a move up. Breaker block. You don't like breaker blocks? Fine. Order block. Right? You don't like order blocks? Fine. Fair value gap. Pick your poison. Pick your sentiment. Everything here is telling you the market now wants to return back to the TGIF range. Where? New York open, true day open, 8:30 opening price. Look at the bodies. Do you guys see that? Look at the bodies in the 8:30 opening price. Right? Okay, here's the sell-off. So here's the trade I took in the PM session. Guys, I'm not asking you to see the market like this. I'm not even requesting that you do, and I'm hoping that you don't. What I'm hoping you do is you understand our bread and butter setup, our New York AM kill zone setup. We wait for a daily POI. Then we go into our hourly and we wait for market structure. Then we go into our 5-minute and we wait for market structure and the kill zone. When you line up time and price and structure and time frames, you will win. This trade, low probability for you. This trade, low probability for you. This trade, which is also the highest trade in terms of point value for the day, is your bread and butter setup. Make sense to you guys? Do you understand why I'm showing you this but I don't want you to trade it? This is all you need, and you will be profitable just using this. By the way, guys, for these trades, I put on about double the size I do for this trade and this trade. Because in London, I'm going against my daily bias, right? So let's quickly, last thing I'll do. Daily bias, long. Hourly bias in London, no market structure shift, right? I didn't get a market structure shift here until right here. And then by then, the kill zone's over. So I am playing against my bias, right, on the market structure side. So intermediate 1 hour here, low risk or higher risk. Same thing here. Market structure is bullish. I'm playing against my structure time frame, which is my hourly on this short. All of this should be noted as being lower probability than the bread and butter expansion. Let's get into how the market books ERL to IRL. This is today's lesson. One of the most important lessons I could probably teach you guys. So, no questions about that now. We're good, right? Everything, we're good there? I know I'm getting better at teaching as well, guys, because I know I explain things fast. Please let me know if I need to slow down or something's not making sense, all right? Okay. Awesome.
Everyone's good.
Okay, cool. So let me now explain today's concept, which is going to be external and internal liquidity. The market books only two things. Rebalance of inefficiency, delivery of liquidity. This is going to be the guiding principle for how I approach daily bias, how I approach weekly bias, and how I approach trading in general. Rebalance of efficiency, delivery of liquidity. The market will always book in this order. Internal range liquidity to external range liquidity. External range liquidity to internal range liquidity. Okay? Always. If we have taken external range liquidity, we will return to internal range liquidity. If we have taken internal range liquidity, we will return to external range liquidity. ERL to IRL, IRL to ERL, premium. Use concepts of premium and discount to find ERL and IRL. We will use concepts of premium and discount to find out which external ranges and which internal ranges we're targeting. Let me get rid of all my lipstick on here in terms of indicators, and let's read some price. I want you to look at just the daily chart with me, and we're going to go through how this happens and how the market books. So, first of all, does anyone have any idea what external range liquidity is?
External range liquidity is your swing high, swing low, wherever your BSL, SSL exist.
Boom. Perfect, Renault. Good answer. External range liquidity is swing highs and swing lows, okay? You can, again, use premium and discount to determine which ones. Okay. Anyone know what internal range liquidity is? IRL.
IRL is all of your those PD arrays, like your unfilled fair value gaps, like the higher time frame ones which are still open.
Yep.
So the market comes to fill the unreclaimed,
yep,
as they say.
Yep. Notice, and exactly, unreclaimed or even previously reclaimed, I'm going to teach you guys fair value gaps. That is going to be the premise of my mentorship, is using fair value gaps. As you notice, we use fair value gaps for our entries, not really order blocks as much, although I love order blocks. We're going to use fair value gaps to keep everything consistent. You can become a profitable trader just using fair value gaps. Notice how internal range liquidity and external range liquidity are the two things the market book, right? Rebalance of inefficiency, delivery of liquidity. Inefficiency, IRL, liquidity, ERL. ERL to IRL, IRL to ERL. Okay, as you can see, these things make sense because that's the only thing the market's ever going to be focusing on is inefficiencies in the market price, but in discount or premium, and swing highs and swing lows, where moves can be made from liquidity. Let's see if we can prove this to ourselves using just a daily chart. So, on the daily chart, do you guys notice we have, let's just do this week, or let's start with Friday, September 1st. Do you guys notice we have this point right here? Is this fair value gap external or internal? Quickly, everyone tell me.
Internal.
Internal. After we take internal range liquidity, where is the target? Everyone tell me.
Internal.
Did you say external?
Yeah, external.
Point out the external range liquidity after we take this.
Swing low, which creates the daily FVG.
Right here, right?
Yeah, right there.
Okay. I would even say, and because this is a higher time frame, I would even say that you can target low-hanging fruit. Is this not external range liquidity? Right in here? Swing
It's
low?
a weird one, because to me that would be that'd be going back into the range.
No, I'm saying if we're coming off this high right here.
Yeah, I know. And so then it'd be returning back into that leg up.
Yes, it would be.
Good.
Because the market
Hard for me
books...
to wrap my head around it being external.
Okay, so the market books... The reason why I call... Okay, so external range liquidity is just swing highs and swing lows, okay? That's just the term that ICT uses, called external range liquidity. Internal range liquidity is just fair value gaps for our sake of understanding, okay? So when I want you to look at a chart, I want you to see us moving from a fair value gap to a liquidity swing point. To a fair value gap to a liquidity swing point. Make sense?
Mhm.
Does that make more sense other than maybe the words internal and external?
Wait, so internal would just be the fair value gap or swing high?
The fair value gap.
Okay.
So the market comes up here and delivers, right, internal range liquidity, this fair value gap. The next target or the next draw is going to be external range liquidity. So we have very, very low-hanging fruit with the swing low that draws into the internal range, right? This swing low.
Would every low be external though?
I'm saying very, very like low-hanging fruit. The real swing low is down here.
Yeah.
So this is your ERL.
True external.
True external. Yeah, I mean, like I'm saying, guys, time frame continuity, right? On lower time frames, this is a fully valid low, right? But let's stick with the daily. Let's go back in time so I actually have more price action to look at. It's so hard to do it on a week where I don't have anything. Okay, let's maybe look in. Ooh, that's disgusting accumulation. Let's look in here. Let me just go to the continuous contract so I can go back and try and find some nice range. Okay. Let's look at this nice little choppy leg up. So, I'm going to start randomly at this point right here. You can start anywhere. I just don't like this accumulation because, let's be real, trading this was like... You guys remember trading this?
Jesus, the fucking quad cluster.
The end? Yeah, true. Okay, so, quick side note. This is in my channel on Naps's Discord, but...
This is where everybody learned product information.
Honestly. Okay, why am I not seeing my NWOGs? Whatever. In here, guys, here. I'll show you because it's actually hilarious.
Go back. You have to set the setting to
Yeah.
go back like a million years.
Here. Here is something. This is my first. By the way, you can tell how far my charting has come. I used to have all this on my chart at one point in time. But when we have stacked NWOGs like this, like 100 stacked NWOGs, expect disgusting price action like this until we displace through them. When we have single NWOGs, expect, normal expansion. Look, stacked NWOGs, disgusting. Stacked NWOGs, disgusting. Single NWOG, expansion. single NWOG, expansion, single NWOG right here, expansion, stacked NWOGs, disgusting. Do you guys see that? Whenever we get into these areas of like a whole bunch of new week opening gaps, we just get this. Isn't that just gross? Like, how on earth do you trade this? Interesting.
Jeez, bro, that just sucked.
It was absolutely terrible. I remember. Okay, so I'm not gonna look at this, guys, because I mean, if you made money here, good job. I think I literally probably had my biggest streak of drawdown in here because I was playing like higher time frame expansions and we'd get zero follow through on either side.
ICT, like one of his best call outs was literally like, don't trade the month of April.
Yeah, look at this is so disgusting. Like, compare that to just like regular price action. Then just this month is just I got chopped up. So I think I lost like 10 or 5 evals and like 3 funded accounts just trading this. It was one of my worst periods of drawdown and just blowing accounts. So let's start when we actually start to displace higher. Okay, what is this in here? Right here. What is this fair value gap, guys?
IRL.
IRL. I'm gonna start marking it out and we're gonna do it together.
Would order blocks? I mean,
No.
I'm assuming IRL is continuing like orders. No?
Nope, I'm only teaching you fair value gaps. That's all you need to know. You only need fair value gaps. Nothing else. Don't overcomplicate it because you can, and you can use order blocks and you can use mitigation blocks and anywhere where internal ranges exist. But we're just gonna use fair value gaps, okay? That's all I use right now for the purpose of my analysis because it's enough. Fair value gaps truly tell a story. They tell more than enough for the story. So where's the next target? So say on Wednesday you see this long wick, this fishtail out of the fair value gap. Where's our next draw, guys?
That down close candle top swing high of that down.
Yes.
Yes. That
Okay. This is going to be our ERL. Nice. Now we're
ERL.
moving from ERL, right? We're pushing up. We're pushing up. We don't get any confirmation of down close, of bear structure, right? So what I'm saying is that the next day, we don't close back in the range. And even on this day, we close above. So because I see this, I'm still expecting a run on higher prices. Look
Wait,
left.
Why would you target the ERL immediately? Like, is it because like we failed to displace below that fair value gap?
Yes,
Or,
exactly.
like, we held the CE.
Exactly. So once internal range liquidity has been met, I now focus on external range liquidity. Once external range liquidity has been met, I focus on internal range. The definition, AJ, of has been met means if I see the level offer resistance, right, and reversal, then I look to the other. Does that make sense?
Yeah.
So this daily buy-side if you're still side imbalance, if we tear through it, right, am I going to continue looking for external range liquidity? No, I'm going to continue looking for internal range liquidity, right? Where else? Look at this. Fair value gap in here, right?
Yep.
So that's another internal range liquidity right here. Where is mine? If I tear through this internal range liquidity, where else am I looking for? Internal range liquidity. Where else is my target? Maybe down here, right? Say we have CPI and it just goes like this, right?
There's a smaller one to the right.
Yeah, you're right. Right here, right?
Yeah.
Yeah. So I'm going to continue targeting internal range liquidity, guys, until it has been met. And been met means, and it's subjective, hence why trading is always subjective, you see resistance or support being offered. For me, this fishtail is more than enough to continue or to confirm a reversal bias, paired, like I said above, right? Pair this with concepts of discount and premium. So we're moving, right, from internal range liquidity, but also we're moving from, is this discount or premium, guys?
Discount.
Discount.
That 61.8.
Yes. Yeah. Discount to premium, premium to discount, IRL to ERL, ERL to IRL. Keep repeating this. Every time you look at a chart, repeat this. Okay, so now we're looking at... Yep, go ahead.
On the current daily chart, that's like we've taken IRL like currently. No, like I'm talking like this week.
Oh.
We've taken IRL, and now we're looking for ERL now.
Yep,
I
so
mean, look at how that CE holds.
let's hide all my indicators. So you're right. So that's why, if we look at this week, and we just try and do some quick analysis, we're going from ERL, which is a daily BISI, right, to external range liquidity, which could be this high, right? However, I am not convinced with this bounce out of daily buy-side inefficiency because I have a balanced price range here, which I need to see violated, or I need to see some displacement into, at least. Do you guys see this balanced price range right here?
Yep.
So this is another form of IRL, right? A balanced price range is a similar or tantamount to a gap. So
Well,
here
there's
we...
a daily fair value gap too.
Yeah, a tiny one right here, yeah. Also...
We can expect IRL to IRL.
Yeah, of course. I mean, if you have two fair value gaps and you're balancing between them, it's lower probability, right? Because they're just going to be consolidating within two fair value gaps. That happens all the time. ICT teaches that. ICT teaches if you see two fair value gaps, right, on the daily, and you're in between them, you got to wait for one of them to give, right?
Yeah.
You can't trade between IRL because what IRL is accumulation, right?
Yeah.
External
that's
range is
accumulation.
external range is liquidation or order pairing, which I'll teach you. Let's not get too far ahead of ourselves. It's only one lesson. Order pairing happens at external ranges. Internal ranges are where delivery happens. So when you have delivery and delivery, you have accumulation. And then eventually you're going to have order pairing when one of them gets tapped. But that's for another lesson. So as you can see here, on the daily AJ, you're right. You could make a claim for this high, right? Or this fair value gap at the least, right?
Yeah, I would say
But
the fair value gap.
we have to use higher time frames. So
Yep.
on the weekly, right? We come in to this weekly balanced price range, and we're holding the bodies. Do you see that? So wait, why don't we just do weekly analysis here? Because usually that's where I start, not the daily. If I'm doing weekly analysis for next week, where do I think my chart is likely to head to? Again, remember the monthly PD area we have. We've swept out monthly highs here. We've tapped into a monthly Cibi. Look at the monthly, guys. Where's the draw here? This is maybe the best way to teach you guys. Where's the draw here? Internal range here, right? Where's the next draw?
External.
Where's the external
Wow.
range?
It's like a little bit before May. Right.
September swing low.
Yeah. Swing low right here.
March.
Right? I mean, look. You don't believe me this is how order flow works. I promise you it does. Watch, we'll do it again right here. Okay. Let me find you another great monthly example. Right? External range high purged. Where's the next draw? Internal. Okay? After we purge this external high, we draw back into internal. Look. Look, on a monthly chart, guys. Do you see this internal range? And look how we react. Right? Do you see? External to internal. Where's the next draw after we go internal? External, right? We'd be looking for. But you notice how we have two monthly fair value gaps? Look what happens. Do you see what I just told you about consolidation?
Then you're gonna wait for it to break.
Yeah, exactly. Wait for it to break. So now it breaks. So now, right? We've gone from we're still seeking internal because now we've shown that we're breaking through this internal level from an external monthly high. Where's the next fair value gap? Someone pointed out to me. It's where we reverse, right? Down here. Do you guys see that? External to internal. External to internal, right? Internal to internal here, consolidation. Then internal to external. This internal come back up. Again, let's do it again. We're at internal now here. Where's the target? After this monthly internal liquidity raid.
Well, the first target will be external, will be that that swing
External, right?
External,
internal
yes.
to external. External to internal. Internal to external. Make sense?
Mm-hmm.
So if we follow the same narrative on the monthly chart, we're going internal here, right? Where's external? Down here. Right? Swing low. That's why everyone.
That March we can take, or even that September swing low we can take. The September one, the down close, yeah. That
Yeah, this swing low, yeah, right here. You're right. That's a better target. There you go. Right. Internal to external. Internal to external. Right. Internal, external. That's okay. Let's go down to the weekly again. So, where's next week
Real
likely?
quick, though, just for, can you go back to the monthly, just for argument's sake here?
Yeah.
So September, right? Put in that swing low.
Yes.
You could can you argue then that the previous month, see the previous month that put in the high in that fair value gap
Here.
in the city, up to the right, one, yeah, that one.
Yes.
See how it went into the internal,
Yes.
and then we get the rejection in September down to the internal range.
Yep.
That fair value gap. Could you make the argument then that it would be seeking external this month?
So this in here is internal range liquidity, right? On a monthly chart. Let's get rid of all this other stuff and just make it very clear. This right here has been internal range liquidity. Where are we seeking after we sweep internal range liquidity? External range liquidity, right?
Yeah.
So here, we've come into internal, and we started to consolidate between the two, right? One of them has to give. I mean, when you're on high time frame charts, you're going to get stacked PD arrays. It happens, right? But ideally, right, the draw is going to be this low. Because this is the liquidation point for external range, right?
Yeah.
Make sense?
Yeah.
That's the monthly chart. So where's next? What are we doing next week? That's the question AJ asked. So let's look at our PD array matrix. We've come up from external here, right? Down to internal here. Now, this fair value gap has been balanced on the weekly. Now we're seeking external liquidity, right? So we come up, could be seeking into here. Go down to the daily, let's see what's going on. So AJ, based on that same thought, what do you think we're doing next week then?
I think we're gonna get to that daily fair value gap, the bearish one, the city, like IRL to IRL.
Yep.
And then from there, how you said, we should just wait for a reaction.
Yes.
To
And then
be
if
honest.
we get a bullish reaction, what's the draw? Right now, we're in no man's land. Yeah. Right now, we're in no man's land. That's okay. It's okay to say you're in no man's land, which is exactly... You guys watch ICT's market review yesterday? He said the same thing.
Yeah.
He said, I'm not even going to touch this until one of these breaks, right?
Yeah, like
This-
that's more high probable.
Yeah, this will be the draw then, right? This is our external range liquidity. So we'll go from
Yep.
ERL or IRL to ERL. Right? That's what I would like to see if we're bullish. However, because on the higher time frame, like the weekly, right? We've now gone from this ERL, I'm expecting IRL down here. I want to be a bear like I've told you guys. So I want this weekly swing low liquidated. On a weekly chart, this is the draw for me because we came in to this balanced price range on the weekly and we held it. So this is IRL. Now, if I just use this chart as my reference point, right? We're going from IRL to ERL. Just like we went from ERL to IRL down here. Do you guys see that? We had this fair value gap. And we went from this swing high right here, which was being liquidated, to this fair value gap. Then we went from this fair value gap to this internal range. Now we should go from this internal range to this external range. Make sense?
But didn't that current external range, like that just got put in that low, when it swept in IRL, right? That daily fair value gap / low to the left. Like when price sweeps that low,
Mm-hmm.
that low, it wouldn't be external, it would be internal, right?
On
Because of the fair value gap.
to look on just the weekly chart, this is internal liquidity.
Yeah, it's internal. So when we go through it and price becomes external, wait, no, when we go through it, does price become external, and or do we just target external?
We target external. No, it's a good question. We target external. But as you can see, right? As you can see here, there is a reason why I'm not bullish for this high. Can you tell me? So good question actually. Why am I not bullish for this high after sweeping this internal range?
Because we went to another internal range, which would be the BPR.
Yeah, not even just that, but look at this right here. Why is this not bullish for me?
Oh, well, like, it didn't even have, like, that good of a reaction. Like,
Not only that. Not only that.
Market structure shift.
Yes, thank you. We have a market structure shift right here on the weekly, right? So this is our swing low. Again, you just stay on the chart you're on. I'm not asking you guys to do multi-time frame analysis for this ERL, IRL stuff. This is going to be your higher time frame analysis. This lecture should be topicked higher time frame analysis. So this is how I want you to approach your daily bias every day. So when we have this market structure shift, right?
Yeah, it's definitely a good concept, but it needs a lot of other concepts.
Totally.
To, like, be juiced.
Totally. But do you understand just that if I try and simplify it to just ERL to IRL, IRL to ERL, does that kind of make sense how the market books?
Yeah.
But even better, right? You're saying, oh, we came and delivered IRL here, right? But what did I say the most important thing to determine if we're going to reverse to ERL is? A reaction, right?
Yeah.
Is this like a bullish reaction to you from this ERL?
It hasn't even made a bullish fair value gap. So
Yes.
It's definitely not
Yes. Failure to displace. So then, wait, before we actually analyze market structure, because I just said fair value gaps tell you a story. Where is the next draw based on just that?
Down south. Weekly fair value gap right there.
What, ERL or IRL? What are we seeking? We're coming off, right? We're coming off. Remember, this is ERL. As soon as we come off ERL, I want you to, in your mind, be like, okay, now we're in a sell program, right, to IRL. Do you think that this IRL draw has been met?
It should be the one below.
Could be. It could be even lower. We don't know. All we can say is that do we agree that this has been met, the draw here? I would say no. Do you agree? Do you think this draw has been met for ERL? We want to go back to, or IRL? We want to go back to ERL, like this swing high?
For now, structure's bearish.
Yep.
Unless we get a bullish reaction, which does not seem like it.
Then we're
Looks like
seeking
reaccumulation.
this IRL, right?
Yep.
So we're going to keep going ERL to IRL. Remember, ERL to IRL, IRL to ERL. If we do not get a reversal pattern or a reversal signature at the ERL or at the IRL, we continue seeking the opposing. Meaning this external liquidation, right? Think about a market maker model, AJ. You know this now. I can blend concepts together. Where are orders being paired here? Say this is your smart money reversal. Now we're blending concepts, guys. This is really, really important. This will give
this
you...
would be your or your first OG consolidation slash.
I didn't. You're right, but I didn't ask that. Where is the order pairing for this liquidation? Where's the original consolidation?
Order pairing. I don't understand order pairing.
Okay,
Like,
where's the original consolidation? In
That's
this
3,250.
in this weekly.
The
I think it's happening
2023
right
Jan to March.
Ah, there we go. Good eye, Renault.
That,
Guys.
Oh, yeah.
Original consolidation. I'm blending concepts. Remember, this isn't what we're talking about. Original consolidation. Accumulation 1. Accumulation 2. Smart money reversal. Market structure shift. Accumulation 1. Accumulation 2. Original consolidation. Do you guys see the makings of what we're doing? Do you see how we're order pairing this external range right here? Ah, so that can help you with bias too, right?
Yeah.
But we don't see any of this because we're not market making specials right now. We're just looking at one concept, ERL to IRL. And I'm going to tell you that you don't need to see any of that because sometimes you don't, and that's fine. What you need to see is We've come off a high, like I just said, right? This is our ERL. And now I want you to evaluate how we treat every internal range. This one, we have a market structure shift going into it. Compare this, guys, right? A market structure shift into the point of interest to something like this. Do you see, where's a good example? Do you guys see this fair value gap here?
Yep.
Do we get a market structure shift into that fair value gap? A bearish one? Or no, or just a wick?
Just a wick.
And then look, IRL, where's the target? Does this look like a reversal to you, by the way?
That's to me.
Yeah, because we're displacing through. You can wait, guys, the whole week, right? And not take a single trade this week and just say, I'm waiting to see if this IRL is being respected. Patience. Look what happens the next week. Look at the move you can capture. Say you only trade the weekly chart, you never go down through time frames. Some people do that. Look, IRL to ERL, okay? External range is taken right here. We're focusing on ERL, right? This is the external range right here. We liquidate the external range. Now we come back into the internal range. Oh, this looks like a strong reaction. I'm going to wait this whole week of Monday, March 13th, 28th. I'm going to wait this whole week. Okay, I'm convinced we're bullish. I'm going to enter on the first open of Sunday, right? And just hold. Are you guys not okay with 400 points as swing traders? Look at that. That's your first take profit. Do you see that?
That's great.
Crazy, right? It's such low risk if you just are patient. These people here endured how much drawdown, swing traders? Say you're doing monthly options, right? They endured 1% for 3% gain, 3 to 1 R. That's their low-hanging fruit. Where's their real target? Right? There's more external range. There's more external range. There's more external range. You can swing trade this for 6 months. You can swing trade this for the whole month of May, essentially. Why? We're going to evaluate, like I just said we did down here, how do we treat this external range liquidity, guys? Do we reject it? Yes or no?
Really. No.
The answer is a defiant no, right? A defiant no, correct? How do you know that? Look at this BPR holding. Right? Say you don't even...
BPR holding and no FE, no displacement below.
Failure to displace, right?
Failure to displace.
Yes. Okay, where's your next target? IRL to ERL. Where's the next ERL? Someone pointed out for me real quick.
August swing high.
Oh, so now we just waited for 1 week to close. We're swing traders, right? We're trading our option support. I do this, guys. Not on the weekly. I do it on the daily chart. I do daily profile swing trades for like Tuesday to Friday. You know what I mean? Like a classic buy week or a classic sell week. But I'm considering in the future, once I have a micros futures account, doing this because look, I'm gonna wait this whole week. Okay, I'm bullish. I'm gonna get in on the true week open. You guys know what that is? The true week open is Sunday opening price, right? Anything below the true week open is discount for the week. I'm gonna get in on that price, essentially the lowest part of this wick. I'm gonna hold till here and take a partial. Nice. I just got 5% or 700 points. Then I'm just gonna sit on my hands and keep 1/3 of my position running, right? Because this is low-hanging fruit. Do I see displacement lower? No. Where's my next target? External range liquidity. Now I have 1,000 points or 12% in a month. I'm going to keep holding my micro. I'm holding 1 micro maybe at this point. Tell me, guys. At this external range liquidity, are we displacing lower or are we continuing higher?
Continuing.
So where's the next draw? Do not even say IRL. Don't look at fair value gaps. Remember what I said. ERL to IRL to ERL. A lot of people will make the mistake when they're thinking of this of saying, well, I see a fair value gap in here, right? That's not the target. This liquidation, right, of this internal range means the delivery is external range. Then, once we deliver to an external range and we rebalance, the next delivery is an external range. So as I'm swing trading, if I close above here, what's my next target?
That March high, swing high.
There we go. So now I've held my position, right, for 2 months as a swing trader. All I did was wait for confirmation of this 1 week to close using our concept. IRL to ERL. And I've gotten 3,000 points on 1 micro. Okay. Now I'm looking at ERL, right? It's been delivered. ERL was delivered here. Notice how I don't care about this IRL in here. If I'm a swing trader, because I'm telling you to use the concept that I'm teaching you. Don't use all the other concepts you've been taught because they're going to give you mixed biases, right? When we close into this fair value gap, if you're a swing trader, you don't care about it as long as you're not rejecting, right, this swing high. Meaning as long as you don't close back below this swing high, right, your runner is safe. So my runner here is trailed to the stop of this swing high. Then, even if I come down here and I reject this fair value gap in here, right, I don't care because I'm going IRL to ERL. If I come down and reject this ERL, I'll get stopped out. Fine, whatever. I got my 1,000 points. But as long as we consolidate in here, even if we come down, we rebalance, you know, this, as you can see, we come in, right, to this fair value gap, immediately come down to this internal range. I can now be a swing trader again and open up a new position. Why? Right? ERL to IRL. So right now we ignored this as our swing trader position. What we saw is we came in to this internal range. We got a good reaction out of it. Where's the draw now if you're a swing trader from here, guys?
That ERL from March.
So we wait for the week to close. Don't take a trade that entire week. Enter on the low of the first, right, Sunday open. There you go. There's your next swing trade. Now I come in to my ERL. At this point in time, I now am looking at reversal. Why? Market structure shift. Do you notice this is the first time we get a market structure shift? So look, external range, the internal draw is here, right? Has the draw been met? In my opinion, it hasn't. So what do we do? Draw fib from high to low? Oh, would you look at that, guys? What does this look like to you? If you just saw this chart and it was the 1 minute, would you be bearish or bullish?
Bearish.
Why?
Because it has returned to the OT of this move, and from here it will start the...
So if this was the 1 minute, would you guys think, all of you, that this fair value gap would hold?
No.
Why?
I mean, no bullish reaction from it. Not really.
What about using the
the order block? 70%.
Absolutely. What about using the concept of ERL and IRL? Have we moved from ERL to IRL with using this IRL? Did we manage to break the ERL using this one?
Nope, and we don't think it will.
I mean, it doesn't seem like it, right? So say you're not even using market structure, which of course we're using market structure, guys. But say you don't see the OTE, right? And you don't see the market structure shift. Just using the concept of IRL to ERL, which is up here. Right now, let's put our ERL up here. Did this internal range catapult us to this external range? With displacement? No, we haven't created a single continuation fair value gap, right? This doesn't look very bullish to me. This one weekly candle is not enough because all I see is buy side delivery, sell side delivery, buy side delivery, right? Meaning we're balancing out this range and we're rejecting this order block like Renaud said. Now let's add on our confluences because I know you guys know more than just ERL, IRL. Of course there's more than that. Here's your market structure shift. This is on the weekly. Okay, so once we have a market structure from the weekly, we draw out our dealing range, low, high, and we look for a PD array. Well, this is our weekly order block. Right? I told you guys I like order blocks on the weekly, on the higher time frames. I'm going to use them. Okay, so once I have my weekly order block printed here and a rejection from it, to answer AJ's question, right? Where is the draw on liquidity? Let's stay on the weekly. Where is next week likely to expand, AJ? Remember, we're coming off of this ERL. So in your head, I only want you to think IRL. I don't want you to think ERL. Remember, we're staying on the time frame that we're looking at, and we're thinking ERL to IRL, IRL to ERL. So where do you think we're going in terms of IRL? Anyone can answer.
likely to go down. I mean, that's
To where?
that's
To where?
what I'm thinking. But
To where?
to this 14,600 level, that
Yes.
swing, the immediate swing low.
Swing low or IRL? What are we using to frame our trade now? IRL or
Oh yeah,
ERL?
the IRL.
Yes. Are we going to
So
continue?
IRL is that, yes, the FVG.
Remember. I'm teaching you something you probably haven't learned before that is different to what you've heard before. Trust me. If you come off ERL, I only want you to look for IRL targets. And if you come off IRL, I only want you to look for ERL targets on your time frame. It's going to help you cut through this noise. This here is noise, right? Because as AJ said, and Renault said a couple minutes ago, we're in a market maker model, right? A sell model to this consolidation. It's hard to know, really, where you're going to bounce and where you're not. But all you have to know on the higher time frame, right, without knowing where each of these candles print on the daily, is where's your draw. That's going to give you your weekly bias. So your weekly bias is going to be more expansion inary. It's going to give you greater expansion in the direction of your draw. So this is your draw, IRL, right? This is a failed IRL bounce because we don't displace out of it significantly, and we're respecting our market structure shift. We're respecting our order block. These two things make us want to look for more IRL. Say we come down to here, guys, and we do this. Let's do a hypothetical. Next week, we do this. And we end like there. Say it's the daily chart. Where would be our next draw? Do you think this would be a strong bounce out of this IRL?
If it had like a...
Say it looks like that.
Oh.
Similar to what this looks like, right? Exactly the same. Down, up,
Well, if
down.
it was exactly the same, then more down.
Yeah. Right? If we had a market structure shift and a fair value gap, right? What if it looked like this?
Then we'd be looking for long.
Ah, okay. Now we're starting to see. Okay, cool. So let's say we look like, like this, which I highly doubt. I highly doubt we'll come down to this level and not bounce, guys. It's more than likely that we'll do this. Very, very much more than likely, especially given seasonal tendency. This will probably be the end of October-ish, right? September, October, yeah, October-ish. And then November, December, Christmas run-up. I can totally see that. But if we get something like this again, where would be the next draw?
The bottom
weekly
fair value gap.
IRL. Okay? ERL seeking IRL. Once IRL has been met, our definition of met is going to be market structure and displacement out. Okay? Let's make it as mechanical as we can be. When we say met of a draw, either ERL or IRL, I want us to consider these two things. ERL or IRL has been met when we get market structure reversal, right? Displacement. Is this a good mechanical rule for you guys?
That's actually a really good rule.
Okay.
I really like that.
So, at this ERL, which one of these statements has been met to show us a reversal pattern has been put in?
Market structure.
Boom.
And you could say displacement, but I mean, no.
I mean,
It's
I
just
would
market
consider
structure
I would consider this market structure shift to be alone enough, and then we don't get really displacement because this is all balanced. In the same way that this is all balanced, right? You guys see these balanced price ranges are telling you a story. Last week, this balanced price range on the weekly, as you can see here, is telling you the story of non-displacement, right? Because we're going up, offering buy side aggressively, but then immediately offering sell side again, then immediately offering buy side again, right? That means that this range in here doesn't want to be revisited for the week. And as you can see, it wasn't, right? We came in and we immediately pushed out of it. But does that count as displacement to you?
No.
No. That's just balance, right? This is just using a balanced price range, right? This is just the week having a profile and an objective, and the objective not being to come back down into this range. That's all we can learn from this, right? What do I tell you about BPRs? BPRs are great when what's above or below them. A fair value gap, right? That's when I really like BPRs. Here we actually tear through this, right? And we don't actually respect it. So this BPR doesn't mean a lot to me. So if this rule makes sense to you guys, we can keep going with it. Make sense? AJ, you like that?
Yeah, it's really good.
Okay.
I like it too.
It truly does show when the draw's been met. This is like it's been fucking met.
Yes, exactly. True. Okay, I like that. So let's stick with that, and let's do a few more examples, just so that now it's in everyone's head extremely clearly. And by the way, I'll do like a Sunday analysis for the week and everything. I'll show you guys all my levels. Don't worry about that. That'll be coming in my channel, so you don't have to worry about like asking about what's happening next week now. So let's do the same example in some price action here. Let's just look here. This is going to be our buy side liquidity, our ERL. All right. We come here, and we have this fair value gap, right? Does this look like a strong reaction out of the fair value gap? Paper, are you still here? Why don't you answer this? Does this look like a strong reaction out of the fair value gap?
No, he said he had to go for like a meeting at work.
Oh, okay. It's all recorded. Okay, AJ, does this look like a strong reaction here?
Yep.
Why?
Well, once it starts holding and then we see that fair value gap, then yes, it is strong.
Mm-hmm. So let's use our rule. Market structure or displacement out of IRL, or in this case IRL, right? We're gonna use lower time frame, obviously, because we're not like before we could use just the same time frame, but you guys want to make a trade in here, right? You guys want to trade this and not just sit on your hands.
Yep.
Okay, so we're gonna have to drop down a time frame. But what I would say is that this looks like the draw has been met, because do you guys see this order block in here?
Order block's holding.
Order block is holding. And do you guys know the PD array matrix? I can post a picture of that after. What's the lowest or the first initiation in the PD array matrix, AJ?
Rejection block.
Ah, nice. So what is this right here on the daily?
All the rejection
All the
blocks.
rejection block within a higher time frame PD array, right? Nice. Draw has been met. In my mind, draw has completely been met because rejection block in this order block. Okay, let's move higher. Let's wait for this candle to close maybe. Tuesday, right? Notice, Monday low of the week. Classic sell profile. This right here is called a classic sell profile. And let's dig in to this price action right here, right? So once the IRL has been met, our draw is this ERL. Let's see if we can frame a trade around it. And then we'll do another example, and then we're good. Okay.
Maybe the 4 hour will be best for like intraday.
Let's use our 3 time frames there just so we have our consistent model.
Oh yeah.
Okay, I'm gonna get rid
No,
of.
but like for ERL, IRL, would you say
Oh,
4 hours the
yeah.
best?
I'm
Like
gonna
intraday.
because we're using the 1 hour structure. I'm gonna tell you to keep using 1 hour structure. But I think when we're doing analysis like this, totally.
Yeah.
I'm just gonna say stick to the 1 hour for now because that's where we're taking entries. You know what I mean?
Yeah, I know.
So like I said, this is your classic bye week. Monday, Tuesday, low of the week. In this case, it's Monday, right? And then a failure swing on Tuesday. I traded this last week and I traded this in July and I showed you guys. So where's the draw? Where's the market maker model, first of all?
Once we get that high,
Yeah, right here, right? Original consolidation, right? Accumulation, distribution, accumulation, liquidity sweep, large news day, probably CPI or something, or FOMC, it looks like Friday, and then final distribution towards this low, right? This in here is tough to navigate because this changes the market maker model for sure, right? Consolidation, accumulation, reaccumulation, huge liquidity sweep, final delivery. But once we see Monday start to push up, so here's our daily fair value gap. When do we get a bullish reaction out of it? Oh, wait, let's also mark out the order block, sorry. Because that's really important for us here. Remember what I said, guys. Order blocks over fair value gaps on higher time frames. Backtest it this weekend and you'll see. Okay, so when do we start to get market structure shift here? Someone tell me. And smart money reversal. Where exactly does that happen? Where's the smart money reversal? Someone tell me the wick where it happens. Just tell me when to stop.
like right there.
Yep.
Right there is that, yeah, wick.
Yep. Because we have Remember on the
I'll look it up.
so remember we've gone from So we've gone from the
strongest
daily.
thing for smart money reversal, like earliest indication, is straight rejection blocks.
Yeah, of course. Well, isn't that a rejection block? Is this buy program activation?
By program activation.
This long wick or this fishtail is the buy program activation, right?
Yep.
So look where this happens, guys. Again, the concepts I'm teaching you aren't isolated. Let's use all the concepts I just showed you. Where is New York True Day open? Now let's blend concepts, and now you guys are going to be absolute killers. Are we consolidating, right, above or below the midnight opening price in London?
In London, we were above. Oh wait, no, below.
So we expect a New York continuation, correct?
Yep.
Okay. So what are we waiting for in New York, guys? What are the two conditions?
Liquidity sweep and PDRA discount.
Nice. When do we get the liquidity sweep? Right here.
We get in. Yep.
Right? This here is your first liquidity sweep, I guess you can take in your New York AM session. There's two entries here. This is FOMC, remember, this day, I think. I don't know. This is a crazy volatile day. It must be FOMC or something. Or high impact news. But here is your first liquidity purge in the AM session, right? Lining up with everything I've taught you. London continuation because we're below the midnight opening price. Why'd that get rid of that? Whoops, my bad. Midnight opening price.
Wait, but aren't we looking for a buy model to happen? So like, we should also wait for an SysD because like we're in the smart money reversal stage.
Well,
right?
you're right. Where do we get our market structure shift?
Well, our microstructure shift, we get a
Right after,
oh,
yeah.
yeah,
There it
right
is.
there.
Good way to ask, though. That's the right question to ask, for sure.
But like, isn't it not valid once we break that low? So we would just look for a SysD.
No, it is valid. Why wouldn't it be valid? This is just a liquidity sweep.
Oh yeah.
Look,
yeah. I guess.
Do we ever, right? So look, here's the narrative. Our daily point of interest is this order block, right? Let's get rid of this fair value gap. I like order blocks more. This is our daily point of interest, this order block, okay? We've come in on Monday, which is a high probability low of the weekday, right? Remember, weekly profiles is going to also really help you. I hope you guys have looked at the primer I put in education. Check this out right after or this weekend. Market profiling guide, AM trades. Monday, high probability low of the week. So is Tuesday, but Monday also. London, accumulation below the midnight opening price, meaning if we're bullish, which we are bullish, we are expecting, right, London to be below the midnight opening price and New York to be a continuation of bullish prices. Okay? So then what we do, we come into New York session, 8 a.m., and we wait for our two conditions to be met. We're not taking this short, guys. We're not taking this inducement of a short. What we're going to do is wait for a liquidity purge, which happens right around here, right? And then we can take our long trade for the morning session. So let's see what that looks like. So London, midnight open, accumulating below. We expect a continuation in New York. Look at this high impact news driver on Monday and how it manipulates price. So what do we wait for? Our purge, and we take our trade on a 5-minute entry right here. Remember, this is our bread and butter setup. The exact same thing we've been doing time after time after time after time, right? Do we get a market structure shift in the 5-minute? Oh, we don't actually. So this isn't our bread and butter setup yet. When do we get a market structure shift actually here?
Like 11.
We had a market structure
15.
shift on the hourly.
No, on the 5-minute. Remember, all three time frames need to be aligned, right?
Yep.
Remember I said
11:15ish
11:15.
or 11:30. I don't know, around there. But like 12, basically.
The only market structure shift he had was to the downside.
Yeah.
That would be the market structure.
Right here.
shift
Is
for
this a bullish market structure shift?
Yep.
Okay. So we wait then. Again, look at how price is manipulated here. This is our market structure shift. Now we wait for a fair value gap entry. It would be right here, right? Here, you'd be stopped out for your trade because this is our bread and butter setup. Anyone disagree with this trade?
Wait, but why that fair value gap below? Wouldn't it be the first fair value gap from the market structure shift? From the 5 minute?
Oh, if this is our market curve, yeah, you're right. So would it be this fair value gap right here then?
I would assume so, yeah.
Yeah. So you get stopped out here, right? You take a loss. What's your loss on this? Damn.
I mean, it's not even a big drawdown.
Yeah, you lose like 20 points, 30 points. I mean, I would set my stop loss at a candle closure below this order block. So 25 points. Yeah, that's tough because later in the afternoon we get this, right? A liquidity purge of London lows. This was a liquidity purge of these lows, but I guess they wanted to come back and fuck everyone again. Then we put in our low of the week. So yeah, we take a losing trade. Here's our market structure from the 5 minute then after that. Where can we get right back in and take back all of our losses in the PM session?
First fair value gap after the 5 minute formation.
Yeah, I'm gonna use this BPR. It looks nice. Because this BPR, right, is forming within this fair value gap. Do you see that?
Yep.
So I like it. You could also use this one, right? Buy side, sell side, buy side.
Stop's going to be a little wide for this.
Yeah.
You also have a breaker.
Yeah, you also have, so you have this BPR. Let's just draw everything you can take an entry on. This BPR, you have this
It's a really nice breaker.
bullish breaker, right? This is going to be our breaker high, actually. Okay, so there's lots of things, yeah, lots of things you take an entry on here. Another thing is, where is the original consolidation, guys? So remember, we're going to a 5 minute market maker model.
From that fake pump, that would be...
Yeah, exactly. These low resistance liquidity run signatures, right? Remember LRL and HRL. So this is kind of, well, let me do a...
And then that little second accumulation would be that like from 10:30 to like 11:30 would be your second phase accumulation.
Yep, nice. So yeah, we can see our low resistance liquidity run signature right in here, which we really like to see. All these swing high failures, and we want to target that so we can get in on this breaker. What else did I say? Once we have a smart money reversal, where's our smart money reversal? Right down here on the hourly. Yep. It looks like probably a wick. Where'd it go? Yep, there it is, right? You guys see that? Renault's buy program activation right here. You see that? Okay. Now on the 5 minute. So yeah, we took a loss. Guys, you're going to take losses. It happens all the time. I took a loss on Friday because I had the wrong bias. Okay, smart money reversal right here. Buy program activation. Every down close candle now, or every up close candle is going to support price on the sell side of the curve. And every down close candle on the buy side of the curve is going to support price. So what do? We draw out our mitigation blocks like I just told you guys 5 minutes ago. Right, this is our breaker. Cool. So this breaker block, right, targeting with this, get rid of that, right there. With this mark structure, isn't that a great entry? Isn't that like a perfect entry right there? You also have this BPR in here. You also have a BPR right here, right? Buy side, sell side, buy side, right there. It doesn't even get tagged. There's lots to get in on, right? As long as you understand that every up close candle on the sell side of the curve is going to be a buying opportunity on the buy side of the curve, and every down close candle on the buy side of the curve is going to be a buying opportunity on this side of the curve. You're good, right? Old selling, new buying. Old selling, new buying. Old selling. I mean, we'll keep doing it. I'll draw them all out for you. No matter how premium we get until the draw has been met. Right? What do you guys see? Look. Old selling. New buying. Old selling. Let me get rid of this one so you can see it. Old selling. New buying. Old selling. New buying. And 5 minute market maker sell model has been met. Right? Do I recommend adding to your position here? Probably not. Is here a good chance to add? Absolutely. Is here a good low-risk entry? Absolutely. Okay, so that's using just breaker blocks, right? Because remember I told you two concepts. Old selling, new buying. All down closed candles will support price. So let's say you don't buy this concept of breaker blocks, right, or mitigation blocks. Okay, here's your order block entries. Down closed candle, I'm going to buy on this. Just blindly buy on every single down closed candle.
You can reaccumulate.
Yeah, down closed candle, I'm going to buy. Okay, where's more down closed candles? Let me get another here. Yeah, this is not a, we don't break structure here, so I'm not going to buy it. This would down close. But this down closed candle. Okay, so guys, you can buy here in the breaker. You can buy here in the order block. If you miss it, you can buy here in the order block. You can buy here in the breaker. Do you see what I mean? Like, there will be entries, and people see this, and people who are neophytes, they don't have a trained eye. What do they see in this entire price action right here? What does this look like to every retail trader right here?
Oh, flag.
Like a bear flag, right? Like a rising wedge. Like this is like a rising wedge on a higher time frame, right? Like we're chopping up all day, like this.
Yeah, I guess.
But let's say if you take a late entry on that order block, the
Where?
down close
Which one?
candle,
This one?
like the one at 2 p.m.
2 p.m. This one?
No, I mean that's almost close to market.
Oh, right here, right here.
PM, yeah, right there. Let's say you don't get in and you just market in there. How much stop loss are you going to give for
Below
that?
the order
Like,
block.
of the order block or
Below the order
middle
block.
of mean threshold of the order block?
Whatever you want, whatever your risk tolerance is.
Hmm.
Right? Like if I got in here, I'm okay with risking 20 points, dude. That's fine with me. Because my return is 60, right? It's 3 to 1 R. I'm happy with that. I'd have no problem keeping my stop loss right there. I don't expect this order block to get even halfway traded through. Why? Can you see what I see?
It would be your silver bullet gap too.
Yeah, there you go. There it is. Now we're all speaking the same language. Right? We have this is a unicorn setup, right? Order block, fair value.
The sucks here is that the low risk entry fair value gap failed.
Which one?
But one candle before 1:15, I think.
115.
1:15 p.m.
Oh, this one?
Yeah.
Yeah, but it does. Failing is a very interesting term because this is not.
It didn't fail.
It's just repricing the breaker block, dude.
Yeah.
So, like I said, you have to, like I said, old buying, right, or old selling is new buying in the buy side of the curve, right? So anticipate that you can have a return to this area. Be okay with it. Actually, add a contract and be happy that you get a better entry, right? Like, this failed gap here isn't a failure, right? Unless market structure shifts below it. Does that make sense?
Yeah.
And this, as you can see, like this is the swing low right here, right? This close below is inducing short sellers. Do you see that? Like this market structure shift, you know narrative. This is not a market structure shift, is it? This little tiny like peak? No, we're rebalancing the breaker because old selling is new buying. And then we push up.
Also in premium too.
Yeah, exactly. You're right.
That failed.
Yeah. I wouldn't call this failed. I would enter here, guys, and be absolutely okay with holding until we violate this. And you know what? So say I enter right here. It's not a great entry. Okay, so I have 40 points, right? But I'm not going to endure that whole drawdown. I will be adding at this order block right here. If I add here and this FVG fails, you bet your ass I'm adding at this order block right there. Because then I'm reducing my risk now. So my average entry is in the middle right here. And now if we close below it, what did I lose? 20 points? That's
What would
fine.
the stop loss be from all this stuff? Like below the breaker?
Depending on where I enter. So I'm going to mitigate my stop loss like dynamically, right? So like I said, say I enter up here, right, AJ, at this fair value gap?
Yep.
By the way, are you entering at a high probable time, 1:30 p.m.?
No.
No, it's probably the
That's
lowest
also-
probability time, right? Because it's just getting a Judas at 1:30,
Yep.
which you
Yeah.
get. So again, we're like, This is assuming we're complete dumbasses and we're just doing everything wrong. So let's enter at this really low probability order block, or at this really low probability fair value gap. Sure, my drawdown for this is going to be below this breaker, right? Because this is old selling, so I expect it to hold as new buying. Now, if we come down and fail this, I'm going to be mitigating my loss by adding a contract in this order block, guys. So now my average price, once I've broken through this fair value gap, right, I'm going to add it probably at 2 p.m., right, silver bullet hour, which is algorithmic hour. My average price now is somewhere like, what's the difference in here and here? Let me work that out. So let me just take the halfway point. So I add here, here. Okay. So now my position looks like this. Whoops. Do you guys see my drawdown now is only 29 points and my potential upside is 70. That's 3-to-1 R almost, right?
Yeah.
So I'm okay with that. As long as I have my R set, I'm okay. If my risk to reward is what determines my stop loss. Does that make sense, AJ?
Yeah.
Because I'm holding my contract. I'm not taking a profit. I'm not taking a partial here. I'm only taking partial here. Make sense?
Mm.
There's nothing. There's no structure here for me to take a partial at. Does that make sense? Like, why would I take a partial here or here or here? Doesn't really make sense, right? Here's the obvious draw of the 5-minute market maker model.
Yeah.
So we get
One
that.
question I have here from a trade management perspective is, once, let's say, you also add there, when in the trade do you bring your stop loss to break even, or you don't make it to break even, like,
Yeah.
just, from a trade management?
So let's say I enter, like I said, at my second position of this order block right in here, right?
Yeah.
So when am I going to do this is what you're asking.
Yeah.
I'll do that once we close above this high. Because that's another market structure shift, right?
Mm-hmm.
So now, once that market structure shift is put in, I'm looking at my dealing range. Low to high. And I'm expecting this discount FVG now to hold. So I will add another contract here, actually. Instead of break-evening my stops for nose, I'll add right there. One more, and then I'll hold all the way to terminus. But if I wanted to break even my stops, which are now right here, I'd do it after this market structure shift right here. Make sense?
Mm.
This is pyramiding, guys. This is how you can... Have you guys ever heard let your runners run and add to your runners and never add to your losers? This is what I mean by adding to your runners. Use every single confluence to add until your draw is met.
Especially on the silver bullet.
Uh-huh.
Quick question.
High probability. Yeah, what's the question?
So at 1240, you at 1240, there's a fair value gap that kind of sits within that order block.
Here?
Yeah. Is that pullback that you see just after the one session, that 130 Judas?
Yep.
That just barely gets into discount of the entire range.
Of this range.
Just barely. Like if you take the New York high, the AM session high down to the low and like lunch. So you see how it just tips its toe in the discount?
I see that, yes.
So if they were me, I would have put my limit order in that fair value gap.
But this isn't this. So you're drawing your dealing range from high to low, right?
Yeah.
You should be drawing your dealing range from low to high for bullish prices. So this right here is your premium point, right? Anything above this for shorts, correct? You're looking for longs here. So really, you want to be looking at this dealing range in here. 0.38 is probably where this is. Let me not guess. Let me just show. Oh, well, it's the other one. It's 0.62, I guess. Do you see how 0.62 is held? See that level right there?
Yeah.
So this right here for a Judas is very, very, very common. What we'll do is we'll liquidate protected lows, like this swing low, and we'll continue to our draw on liquidity, which is this high. So that's why we don't need to use the concept of premium and discount on this leg, right? We don't need to look for or we don't need to look for discount prices to retrace. Why? Because we have narrative of a market maker model here. So once we get this smart money reversal at the bottom here in this hourly wick, we then just look for old selling to be new buying. It's really that simple, guys. You see how this is the perfect entry, this mitigation block right here? Because this is the first point of old selling in the sell side of the curve coming back up. So that's where we get the first round of accumulation. Old selling, new buying. Old selling right here. This is the second point of old selling. Notice how the accumulation on the buy side of the curve matches the distribution on the sell side. Do you see that? So we're distributing and reaccumulating here. We're distributing, reaccumulating, right? Distributing, reaccumulating at this old point of selling. Make sense?
And we're also, can you check if we went below mop right there? Then I open first.
Yep.
AJ, what did you say?
Like, just asking him.
This is midnight open right here.
Midnight.
This is midnight open.
Yeah.
Close.
Close.
But as you can see, smart money.
I mean, that entire low to high, it goes back to the weekly open.
The true week open?
I believe so.
Yes. Yeah. Yeah. Good eye. You want to be a buyer in a case. So you're right. This is about weekly profiles. So you've obviously read ahead. But if you're looking for a buy week, you want to buy below the true week open. You're right, which is here, right? True week open is right here. You see that?
Okay. No, never mind.
No, you're right though. It is, but the midnight opening price is even better point to buy below, right?
Yep.
You're in deep discount, and as you can see, we put in the low of the week on a Monday for a reason, because we have this manipulation leg before, right? This real. Oh, what'd you say?
Like, I've always noticed that price will always retrace to discount or premium. You just gotta wait.
Yes,
Like,
yeah,
if
being
you
patient.
Just wait a little. You see that wick? That's just manipulation. That's just people trying to accumulate their lawns.
Well, this was dirty. This was actually very dirty because I got in originally at this point right here, but in reality, right, it's only because this was a minor swing low. Do you see that? This is a down close candle.
Yeah.
If this wasn't, I got baited, AJ, so hard by this swing low right here, because look how tiny this bearish candle is. Do you see?
Yeah.
See how tiny that is? So I get baited by saying this is the liquidation, right? When in reality, if this was a green candle, I would have waited for this swing low to be purged because our condition wouldn't be met, right?
Yeah, but like, wouldn't that make you bearish? You get a nice CISD.
No, because we don't get a CISD. It's just remember, I'm bullish on the week, remember? Because my higher time frame.
On the week. But
So,
like, if you have a bearish CISD, you might as well.
but we don't have a bearish CISD. This is just these are all wicks.
Yeah, but it closes below that candle low. Like, if you go on the line chart, you see it closes below that candle
Here?
low. Candle body's low.
Like this
And,
one.
Yeah. So
Nah, this is not a
there it is.
CISD for me. You have to look at context, bro. We're in a higher time frame, right? Buy model, 100%. We're tapping into the daily order block. Remember what I said? What has to happen with all three time frames?
Onto
Do you notice how right there you're fading your own highest time frame? But in general, what is the highest confluence time frame? There's only one answer.
higher.
Your highest time frame, right?
Yep.
So are you bullish or bearish, AJ, on the daily?
On the daily, I'm bullish.
Okay.
But
So
I'm saying-
are you gonna trade? Like, remember I said you can always, and I do sometimes trade in between, right? Like I trade the London reversal to OTE. I trade the New York sell-off and Friday TGIF. What am I teaching you to only trade? Bread and butter, right?
higher time frame.
Bread and butter. What's your bread and butter? Time frame continuity. So, are you bullish or bearish? Right here, are you bullish or bearish in this day? Remember, we traded into our week daily order block as well.
I would be bullish this day.
Okay.
But I mean,
and for the week, you're
bullish.
bull.
1 hour continuity.
Yeah, and we're waiting for 1 hour market structure shift. Where do you get a market structure shift? You're saying SysD, right?
Yep.
But look at the market structure. Do you not see this clear bullish market structure with a fair value gap? How isn't this 100 times more convincing than this tiny ass SysD right here by one tick? Like, here's what you're saying SysD is right here. I get it. You're closing below this, right? This right here. What's more convincing? This 1 hour market structure shift with fair value gap, or this tiny SysD with a massive wick?
Yeah, the market structure shift.
Like, that's why I didn't even want to teach SysD, because really, if you have market structure shift, this is your SysD right here. Do you see that? That's your SysD. Make sense? The state of delivery is bearish. Do you see the delivery state is bearish? Then we come into our daily order block down here, and we push up. Do you see that as being our SysD?
Yeah.
This here is just manipulation.
Yeah, I agree with that.
But it's hard. It's hard to notice in real time, 100%. You see this is what I'm saying on the 5 minute, guys. Like, you see this and you're like, I want to be a bear. But that's why I'm telling you, don't go on the 5 minute. Because you don't need to. You'll be able to tell the narrative from your 1 hour. Because again, we're trading the bread and butter setup, which is right here. Bread and butter. Just this. Don't trade this. Don't trade this. Don't trade that. Trade this. Higher time frame continuity. Daily, bullish.
So the point being, like, we need to be on the 1 hour all the time, and only during that time, that kill zone time,
Yes.
8 to 11,
12, yes.
we move to 5 minutes to look for the entry. Once the purge has happened.
Only after the conditions have been met. If they don't get met, then you don't switch time frames, okay? So look, daily, right, on the Monday, are we bullish or bearish? We'll just do it one more time. Let's finish off the lesson with it. You guys understand the ERL, IRL stuff now?
Yeah.
Makes sense, right? And you like these two rules we have?
Yep.
Okay. I just want to make sure there's no hesitations there. Let's keep that there for our draw on the week.
I mean, it's one-on-one material for me right there.
Definitely. We will go through it in one-on-ones. Don't worry. Okay. So this Monday, right? I'm asking you one question. I'm gonna do it in step-wise, piece-wise function. Don't think ahead. AJ, don't get smart, okay? I know you're smart. Just answer each question, okay? AJ, are we bullish or bearish on Monday, based on this candle and this one day POI?
Yes.
Okay. Don't answer any more questions. For now. Okay. You said you're bullish, right? I'm going to put a big green B for bullish on the daily. AJ, are you going to trade shorts today?
No.
Under any circumstances?
No.
Not until you get your first 10 grand in payouts. Then you can start doing whatever you want, okay? Once you get 10 grand in payouts, bro, I don't care. You can start trading the retracements. You can start trading OTE into your PD array. You can start trading TGIF. I don't care what you trade, because then you're profitable. Are you trading any shorts today? No. You're waiting for conditions to be met. What are your two conditions? In the kill zone. You're not trading any other time. You're not trading London. You're not trading New York, PM, Silver Bullet. You're trading 8 to 12. What are your two conditions, AJ?
PD array, discount, and your liquidity.
Nice. So let's draw out our dealing range. Dealing range is the liquidation of lows to the liquidation of highs going into the session. So 8 a.m. is this candle right here. Here's our high. We want to be a buyer below 0.5, and we want to be a seller above 1. We're not selling, so we're only buying. Another trick question. We only want to buy. Okay, here's our dealing range. We get a false entry. Yeah, it sucks. You know what? This little fucking candle, this candle screws us over because it meets our condition, right? We sweep an hourly low right here. We got a continuation purge, right? And we also get a retrace into our fair value gap. Yeah, it's tough, guys. Sorry. You know what? Sometimes you're going to take a loss. It's not going to be often, but you will. And it happens.
Even if you're long, you'd probably still come out risk-free if you take like one partial.
Well, let's see. I think here you just fully take the L. Let me see though. So look.
But
Yeah.
like if you long off that fair value gap, that's like.
But that's not our rules. That's not our rules.
Yeah, I guess.
Okay, so now we have our liquidity purge. We have our 1 hour retrace into discount, right? Dealing range. Dealing range is right here, guys. Right? That's our dealing range. We want to be a buyer below. Our midnight opening price as well, I can mark it out for you guys, is right over here. That's our mop. Okay, so this is a very, very clear buy signal right here. Look, this looks like smart money reversal. I got baited. But the nice thing is that we don't actually get a market structure here. So we're not actually involved in this shit, which gets us fucked. We get our market structure right here. And you guys notice how kind of pity this market structure shift is as well? Like, already, this doesn't look great, does it? Why? Because we're buying also above discount, right? So we would have preferred our market structure to be like here, right?
Yeah.
But we're following the rules. Whatever. It's market structure shift. It doesn't need to be in discount. It would be better if it was. We do want to be a buyer in discount ideally, but shit happens, right? Okay, let's take our entry. This is why we use risk management. I've never promised you guys, by the way, that this is a 100% model. We all take losses. You might lose for months on end. It happens. Everyone has periods of drawdown. But let's see what we actually do here. So long, right? We're going to enter maybe on the halfway point. I like to wait for some sort of confirmation of the candle, which would have saved you, but let's keep it mechanical, right? Like I told you, 20 for 40. All right, guys, you lost 20 points. Are you going to survive? Are you going to live? Yeah, you're going to live. You're going to
Possibly, perhaps.
You're going to be just fine. Are you going to take another trade here? No. Are you done trading for the day? Yes. You're done. You're done. You take your loss. You lost $80 on 2 micros. That's nothing. You're fine. Move on. It's not the end of the world. Don't revenge trade. You could get another entry here. Here's a question. AJ, is this in your kill zone?
Is that after 12?
Yeah. Are you entering?
No.
No, I don't care. You're not entering. Cool, next day. So now let's say, you know what? Let's just do this for this peace of mind quickly. Then we're done this lesson, but
Find a winner so we can leave on a good note.
Yeah, so we're at minus 20 Monday, okay? If I need to do this with you guys every single time we meet, I will, because this will stop you from being dipshits and revenge trading. I'm only saying dipshits because I do it too, and I'm a dipshit as well. Not me singling you out. I do the same thing, and I call myself a dipshit. Okay? Nothing singles you out there. I'm the exact same way, and I'm learning, and that's what's making me profitable over time. Okay, guys, going into Tuesday. AJ, I'm going to ask you one question only. Are we bullish or bearish on Tuesday?
Perhaps bullish.
Shut up. We're obviously bullish, okay? There's nothing bearish about this. We're reacting off our order block on our 1 hour, right? We keep our Monday. And this is why I use the daily dividers, right? Where's our market structure shift? Right here. I'm going to extend that out in time, guys, throughout the entire week. This is going to be my barometer, if you will, something I compare against every day, because this is where I get my market structure shift. This is a critical point. I don't want to see us, close too much below it. I'm okay with these manipulation wicks, though. Oh, wait. Where's my market structure? It's actually right here. Whoops. Wrong day. No, it's right here. You're right. We close above it. Maybe it's this high. Do we put in a new low after? Let me quickly see.
Yeah, take that Fibonacci, like low to high, and you'll see that we finally retrace the premium, and
Yep.
that's when we get those wicks.
Okay. So,
Discounted.
yeah, this will be our new market. This high right here is our new market shift because we put in a new low right below it, and then we break it. Right. I like this one more, though, because it's the significant Judas. But whatever. Either one of these you can use your market structure shift. Right. As you notice, once we shift market structure, are we putting in bullish structure? Yes, we are, right? We have this balanced price range in here. I'm marking that out for Tuesday. It's a point of interest, obviously. Look at the bodies. This is bullish market structure. This is narrative, right? We shift market structure above this high. Let me make it bigger so you guys can see it. Shift market structure above this high, put in a balanced price range. We never violate that. We're bullish on Tuesday as well. Okay. Watch this, guys, actually. Wait, do I know where the end point is? I'm going to do a lesson on this eventually one day as well. Isn't that funny? That two deviation reversal right here. Let's see where it goes. Let's see if it hits 4. It's 3. Yeah, guys. Totally cherry picked that right there. You guys should be using deviations on every single one of your plays. Do you guys see that? I had no idea where. I just played it out for you. I had no idea, right? Look at that 4th deviation reversal.
Bro, we need to start shorting the 4th deviation.
or start shorting every deviation for a pullback on lower time frames.
Literally.
No, I just don't. But it's cool. Like, these standard deviations are very cool. I will teach you guys these eventually. They're just really simple deviations. You guys can probably already see. I did a homework on it yesterday. You guys can already see how I draw them. Okay, so here's our market structure shift. Now on Tuesday, right? Are we AJ? Are we bullish or bearish?
Bullish.
All right, big rating for AJ. Bullish daily. Are we buying longs or shorts today, AJ?
Longs.
Are you sure you don't want to short?
I'll think about it.
Okay, so in London session, I'm going to mark out our midnight opening price again, guys. This is our true day open. Okay. Are we above or below in London session consolidating?
Above.
Above. What does that mean for New York? Continuation or reversal?
Reverse.
Nice. Nice. Yes. Cool. Reversal. What are we looking for our conditions?
PD array, which is that order block, and then
First thing we should do is what? Always.
premium and discount.
Dealing range. Yes. Dealing range liquidates lows, liquidates highs. This is our dealing range, boys and girls.
Like a 0.5.
Okay.
Beautiful.
Now we have a dealing range, and I have a point of... I'm going to make this background way less because it's really annoying me. We have our dealing range, right? And we have our point of interest. We're only entering in New York. Where's our stop hunt, guys?
Right there. Continuation purge.
Yes. Continuation purge, right? Pull into our balanced price range. I don't need to keep that there. You guys can see it. Here's our daily order block. Confluence, 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 right? Notice the balance
One
price.
question, clarification I need is why did you take that purge on H1 versus the down close candle at, like, I would say, New York kill zone session, that large down close candle that has been purged. So take that
This.
sweep. Yeah, that one.
Yeah.
That also counts.
Yeah, it also counts. Watch. So exactly. I'm gonna mark out my my discount PD array. Okay. And now I can get rid of my dealing range because it's annoying me. I'll keep my fibs though, because it's nice to see fibs.
You can even say that 2 p.m. low was the final purge.
This is the final purge, like this right here.
Yeah.
And then this is a continuation purge in the PM session. You're right, but we're just looking. We don't have hindsight on our side when we're trading in real markets, right? So obviously we're gonna see this 9 a.m. purge as a purge. Let's see if we can make a trade off it. I'm gonna show you our P&L for the week. Even though we don't have to have the best entries, we just have to have an entry. Okay, so here's our purge at 9 a.m. Now we look for market structure shift, right? Remember, all 3 time frames have to be aligned. Here's our 1 hour market structure shift, bullish. What's our daily? Bullish. Now our 5 minute needs to be bullish. Okay, come in, break structure, right? here. You guys see that?
Mm-hmm.
Okay. Now, let's get our entry. In the kill zone. In the kill zone. So what you're saying, Renault's?
Silver bullet too.
Renault's, remember what you said about how on the 1 hour, why are we looking at this candle and not this candle? Do you notice because I wait for 5-minute market structure, I also get the benefit of having this entire candle play out as well?
Right.
Right, see? We're not just entering. I'm not just saying, yes, 1 hour purge, let me just market enter. No, that's fucking so dumb. We'll wait for market structure because now we have 5-minute bullish, daily bullish, hourly bullish. I am in the kill zone and I return to OTE. I'm probably going to make money on this trade. I'm pretty confident. And if I lose, I lose. Whatever. I'll make it the next day. Where is my first PD array? Let's mark out this bullish order block. I'm going to make this green, guys, because I feel like I'm getting depressed just staring at all this gray. So much gray on my chart. Okay, do you guys see this bullish order block? And do you see this tiny little fair value gap in there? That is a unicorn setup. That is your low risk entry. Okay.
Yeah, probably long that.
Okay, long it. Don't go down on time frames. Don't go to the 1 minute. Just fucking long it wherever you want here. What are we doing? 20 for 40? Oh, I accidentally shorted. Whoops. Long it. Right. I would long it at the top of that order block right there. Nice, guys. 40 points on the day. Guaranteed. Where is the 5-minute market maker model here?
You know, when I see this forming, my biggest psychological barrier is I know there is FVG down below also at 10:30 that around that time.
Here.
On the 5-minute, yeah.
Yeah, but where's
I'm always thinking that if I get in there, I will have to bear a large drawdown and get in on the lower FVG also.
Okay, so then what you're gonna do is not enter on FVGs at all anymore. You're gonna enter on order blocks, okay? You're now gonna be an order block guy because old selling is new buying, okay? Old selling on the sell side of the curve is new buying on the buy side of the curve. Meaning every down close candle, right, is going to support price after a market structure shift. And every up close candle on the sell side of the curve is going to support price on the buy side of the curve. Does that make sense to you, that concept? It's so important.
Yeah.
So
every down close will support price on the buy side of the curve.
Yep, and every up close will support price on the sell side of the curve. That's the idea of breakers and mitigation blocks, okay? Because you have a change in the state of delivery and the activation of a buy program, which will refer back to these up close candles, right, on the sell side and be like, oh, we want to buy in these up close candles. We want to buy in these up close candles. And it will refer to down close candles on this side of the curve and say, we want to sell in these up close, or we want to buy in these down close candles. We want to buy in these down close candles, right? Think of it just like an algorithm. When you think of it like math, right, and a system, you won't get scared that it's going to come down and stop you out and give you greater drawdown. Remember the rules. Is this a down close candle right here? This one right here.
Yeah.
You're going to be a buyer in this candle now, Renault's. Okay? You're going to allow yourself this entire range, which is going to be whatever, 25 points, 30 points. You're going to allow yourself 30 points here, okay? Go one contract. Why? What's your target? Your target is the original consolidation, London highs, 80 points. Are you not happy with 2.36 R? That's amazing, right? How much drawdown do you really experience? 5 points? 3 points? Right? But you're going to give yourself room. What's your real R on this trade? So say this is what your trade idea looks like when you enter it, right? Remember, we have this small fair value gap. But if you're having problems with fair value gaps, you're going to now be an order block guy. Just make the change. You're going to be an order block guy. AJ this week is going to be a mitigation block guy. I can prove to you guys, right? I can prove to you that every week, if you guys change your entry model from order block to mitigation block to breaker block, you will all get money the same way. Okay, does that make sense? Look, say AJ enters at this breaker block, and you enter at this order block, and Duncan enters at none of those two, and he actually enters at this Fair value gap. Do you notice how you guys all made money right there? He enters at this fair value gap right here. Do you notice how each of you guys made money on that trade?
Yeah.
Right? There's 3 points to add, and you have all of them, Renaults. Right here in this area, you have everything you need to know to not be scared and to be okay with drawdown. So don't wait. Don't wait for this. Get in on the order block. Get in on the breaker block. Get in on the first FVG, but allow it to come down here if it needs to. Okay? Cool?
Yep.
Nice. There's your market structure shift, and here's your entry. Do you guys like FVGs, or do you guys want me to start using order blocks for my backtesting? I don't care which one we use. I'll use all three, actually. From now on, I'll use mitigation blocks, order blocks, and fair value gaps to show you it doesn't fucking matter. You're all going to make money using any one of them. Someone tell me where the original consolidation is. I'm going to delete this.
Just that rising wedge, basically.
Yeah. Right here, right?
Mm-hmm.
We have an extra confluence of equal highs with London, right?
You could call that whole thing original
Yeah.
consolidation.
Right? This is our original consolidation. So once we have a change in market structure, a market structure break here, now we're looking for the buy side of the curve. Sell side of the curve, buy side of the curve. All right, SMR, smart money reversal, within an hourly context, accumulation 1, right? 1 distribution phase. Accumulation 2, second distribution phase up here. We're not trading to the second distribution, guys. Our original consolidation is the 5-minute market maker model. We get our 80 points. Are you taking partials? Yes, at 40. So let's write in the notes. So Tuesday, how many points did we get? Plus 40. I'm only going to show you guys the low-hanging fruit. Do you realize here that you got more than 40 points, right? Here's, like, even the low-hanging fruit of this high is 60 points. But let's say you take it all off at 40, right? What's the reality? AJ, are you going to hold some to here?
Yep.
Yeah, are you going to hold some to this high?
I'm probably just gonna hold for those equal highs.
Yeah, okay. But you guys notice I'm teaching you guys with the most conservative, like blue balling myself in terms of how much I can boast about the model approach. This is only plus 40, okay? Sure, you get 40 points on Tuesday. Nice. We're already, by the way, as you notice, plus 1 R on the week. Interesting. How just one day made up for our loss. And more, but whatever. We'll just use plus 40.
But yeah, I gotta take off here.
Okay, sounds good. Yeah, all right, that's the lesson. As you guys notice, the same thing happens again on Wednesday. Look, continuation purge, right here. Or this one actually. AJ, stay for this last example. Do you notice how on Wednesday, we'll just stay on the hour. We won't go down to the 5-minute. Same protocol. Are we accumulating or above or below midnight opening price, guys?
Above midnight.
Why can I not find my MOP there? Here? Or that looks like below to me, doesn't it?
London, we're below.
London, we're below, and then we burst up above, right? We displace above. So do we expect accumulate? Or do we expect continuation or reversal?
Continuation.
Yeah. Why? Because we've already put in. Remember, opening.
The low of the day.
Yes. Are you guys starting in your head to visualize an opening low, high, close candle?
And we've already accumulated.
Nice. Guys, in my head, I just see a little candle here. Not even joking. Look, opening, low, high, close. Right? That's what we have to see it as, and you're going to. Trust me, you're going to start seeing it. Mark out MOP every single time you draw your hourly like this. Okay? Now look what happens in London, in New York. What do we wait for? Stop hunt and or return to discount, right? So a lot of people are induced into buying this market short. We're still bullish biased. Or selling this market short. It's a Judas, yeah, exactly. And where are we retracing to? Premium, right? Dealing range low. Dealing range high. Right? So, in this session, here's the question. Do we get a stop hunt? Yes or no?
Yes.
No.
No stop hunt, but it returns to the OTE for a long.
So what are the two conditions were the following, right? Nice eye, Renaults, right on OTE. What are the
Didn't we
conditions?
raid
Liquidity rate or?
or discount, but like, didn't we raid that 1 hour low?
This one?
No, to the left, that bottom low. Yeah.
No, we don't.
Right.
This is okay. Think of it like this. Remember how I told you to think of lows and highs? This is all one candle, right? This is all bullish price action. There's no structure put in here. Look at a line graph. See that?
Yeah.
Whereas here, this New York, do you see how this is high? Like here's the best way to think about it. I used to get tripped up on this all the time. Get your little Sharpie and do this. High, low, high, low, high, low. And then you'll probably have better Sharpie skills than me. Take it out. This is a liquidity rate because that's a low. Do you see that?
Yeah. Okay.
Whereas here, it's just high, and then there's no low, right?
Yeah.
And then, but what we do, like Renault said, is come back into, right, dealing range low, dealing range high, OTE. Last thing before you go, AJ, let's see if we can get our entry, and then we can go. We're in the kill zone, right? 8:30 news. Did we get a return back before this? I'm wondering if we can get in before the news. No.
Just long it.
If we just fucking long it. If we had traded into this order block, guys, I would have been happy with going in before the news started, which would have been very, very nice. So say we turned into this order block, right? Before we pumped up, I would have entered just market entry at that order block because it's 8:30 news day. But as you can see, I made a post on this in Nap's channel. The reason why we don't have a Judas to the downside before this expansion up is because right before news drops, look what we do. We liquidate this low. I don't know if we do actually. Oh, we don't.
Yeah, but we accumulate and under month, so.
Yeah, so I guess you can't. There's nothing today that lets you get that fucking nice pre-news entry, which is beautiful. Unless you see this candle and you're like, okay, I like that. That looks like a bullish candle given my bias. But where's our entry today? All right, come in. We're in our kill zone. We return to OTE. No stop hunt. That's fine. Where are we getting in? Maybe right here? You guys okay with this entry right here? Or do you guys want to wait for OTE? You tell me.
Probably the CE of the Fair Value guy.
See the fair
So
value?
like right there in the middle.
Okay, so you want to get in right here?
Yep.
Okay. 40 for 20. There you go. There's another winning day. Where's your target? Where's the market maker model here, guys?
Target high bit.
Right?
I mean, 40 points.
Original consolidation. Accumulation 1. Distribution. Reaccumulation. Tiny reaccumulation. Then a redistribution. Right? Into our POI on the 5-minute. Remember, we're targeting a 5-minute market maker model. Here's our original consolidation. Here's where we target. We want to wait. We want to ideally wait for a 5-minute market structure shift too. So you could long this fair value gap right here, right? What do we say about our rules though, AJ? What 3 things have to be in agreement?
The kill zone too, so.
Kill zone 2. So technically, on this day, if you want to wait for a full 3 confirmation, meaning we want a 5-minute market structure shift as well after seeing this, unfortunately, it falls outside of our kill zone. Now, this is what I'm saying about when you're not profitable versus when you're profitable. When you're not profitable, follow the rule. Don't take an entry today. Let it go. You'll make more money. You're already up on the week 1 hour, right? You're up already. So let it go. If you want, you can take a riskier entry without the 5-minute market structure shift. Or, if you're smart and you want to wait for that market structure shift, you can take an entry in the PM session perhaps. So maybe you go like this. You mark out your 2 p.m. And again, right, this isn't the best conditions. It sucks that this news driver didn't offer us an entry beforehand. Whatever. You get your market structure shift, and now you want to return to some sort of discount PD array of the dealing range. We also get a market structure shift on a higher time frame. Right there. Where's your PD array? Right there. And there you go. Right? You guys see that? Now you can take your PM session trade. Again, lower probability, right? But this is your silver bullet, whatever. No, it's not. I don't care. If people shorted this, you'd go long right here. Now you'd have high confidence in this. Again, 40 for 20. You get that in 5 minutes, 10 minutes, right? 5, 10, 15. In 15 minutes, you get 38. And then you hold for 40. The original consolidation, guys, is still yet to be met. You can hold. And as you can see, if you were allowed to swing positions, which is why it sucks that we trade on prop firms, we get that. Cool. All right, guys. Yeah. So that was today's lesson, ERL, IRL. Post any questions you have. And the only homework I posted, I won't post any more for the weekend because I've given you guys a lot of homework. But definitely do this. Go through each of these screenshots, right? Find on your chart the same projections, mark them out, and then in your journals, if you have journals and you want to do this, which you should, comment about what you find about each of these projections. Our next lesson is going to be specifically on standard deviation projections, and we'll be tying that into our market maker models to get even more sniper entries and exits.
Yeah. Well, thanks.
All right, guys.
Beautiful. Fun lesson.
Thanks.
Thanks. How do you guys feel about time? Are these too long? I tend to like to do like back testing as well in these lessons because I feel like it's more interactive and it's better. In the future, I can make them more like hour straight to the point.
I mean, it was like 3 hours, so it was pretty long. I'm not gonna lie.
So let's
like an hour 30 is fine.
1:30. Okay, so let me go comments for next lesson. Let me just make a note of this.
And maybe we could have like a specific backtesting session. That way we can just boom lesson. Well, I mean, you're the teacher, so you do what you want.
But it has to be what aligns with you guys. Do you guys an hour and a half is good for the lessons, guys? Is that too long, or do you want to do? Is that enough time?
I think that's perfect.
Okay.
I think that's just
No, that's good. I mean, today I think we did a lot of other Q&A and all also.
Yeah,
right?
totally. So what I'll do for next lesson, guys, is I'll do the lesson first without Q&A and backtesting, and then we'll have optional backtesting and Q&A after for whoever wants to attend, okay?
yeah.
Because I like doing them on the weekends or Fridays because we can review the whole week's price action. I was thinking about doing them during the week, but I'm thinking oftentimes you guys are going to have a lot of questions after the week ends about what happened, so it's probably best to do them either on the weekend or Friday, right?
Yeah.
Okay. One-on-ones this week, everyone in their channel. I'm doing AJ, I guess, tomorrow at 10 a.m. I'm going to do Renault's on Monday at 6 p.m. Duncan, you can send me your availability and paper as well, okay?
All right, wait. Okay. So we have it for 1 p.m. tomorrow, but 10 a.m. works way better for me.
Okay, 10 a.m. tomorrow for us, AJ, and then Renault's 6 p.m. Central on Monday. Duncan's going to send me a time. Paper will send me a time. Post any questions you guys have for anything under questions, as always, as your backtesting this weekend, and let's get at it next week.
Yeah.
Beautiful.
Thanks,
All right,
guys. Have a
good
nice
one.
weekend.
Take care, y'all.